2%. More data suggesting Main Street America more upbeat. The U.S. Small Business Optimism Index, that is up. And more evidence, inflation is slowing. Producer prices rising in July by less than forecast. That reflects the first decline in services costs this year. And of course, tomorrow we're going to get the all-important consumer price index. And we check the market's view all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. We cover everything that you need to know in business and finance and economics, and we do it through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries all around the world. We also like to go outside Bloomberg Intelligence to get a broader take on what some money managers are doing in this market. And for that, we go to Anna Rathburn, CIO at CBiz Investment Advisory Services. I'm looking at a market, Anna, that is definitely responding to this PPI data as in another green light for the Fed to cut in September. Is that how you're taking this?
Yeah, that's the initial reaction from the markets today. I mean, it is a prelude to tomorrow's CPI, which is even more closely watched, but it was a really good prelude. We had services, and that was really good news, contribute to the disinflationary trend here. And, you know, the numbers were down, even though we had a weaker dollar really pulling up those trade prices. So in all, it was actually a really good news, at least in the first reaction for the markets. But honestly, I'm starting to wonder if we have to start worrying about disinflationary forces actually reflecting some of the other slowing economic trends that we've seen in the labor market and from the consumers and frankly from Home Depot as well.
So what did you take from the Home Depot numbers here? We'll get retail sales later this week, but boy, Home Depot's a pretty good barometer out there. What did you take away from their earnings?
Yeah, I mean, in some ways we're not surprised, right? Because we've been talking about weak consumers actually for a really long time and some pressure on retailers for a long time. So it actually fits that struggling consumer theme. But I think there's a little bit more to this. It's the interest rate sensitivity and it's tied to the housing market. So, you know, this whole PPI, CPI, what will the Fed do? This will actually have a lot more weight on retailers like Home Depot that are very much tied to the housing market because frankly, unless we see cuts going down to like 200 or 300 basis points, we're not going to see stabilization of the housing market. Effective mortgage rate is below 4%. So from a perspective of a lower guidance, perfectly makes sense to us. Higher interest rates being named as one of the culprits makes perfect sense to us. And I also think there's sort of an upgrade fatigue. Everybody upgraded everything during the pandemic and the ensuing years. And now, like, what else are you going to upgrade, right?
So that's actually that's a lot of cuts we have to get some juice going in the housing market. And you mentioned sort of the other slowing economic trends from consumers and that sort of the disinflation was creating like a veil that we're like not really seeing those slowing eco trends. What exactly are you referring to and how worried are you?
So I'm not worried like sky is falling, right? I mean, we're watching everything very carefully. So labor market, we've been watching it for about a year, household survey versus establishment survey. I know this has been discussed in the public discourse for a while now. And we're watching it actually converge again. They've been diverging for a while now. They're starting to converge and we're trying to see if there's a trend there. We're also seeing what people are calling that K-shaped economy, where the luxury goods market is doing really well because of wealthy Americans. But frankly, lower-income Americans are really, really struggling. And so these are the things that we're watching. And frankly, how much does that creep up to the middle class, right? Because at some point, when rates stay high, it's going to eventually impact everybody at some point. And the question is, can the Fed cut fast enough? I'm not talking about 50, 75 basis points, but at a 25 basis point clip, all the way down to where they want to be for the consumers to actually stabilize. That's really what we're watching. And where we're worried is that we're not going to get those cuts.
All right, if we don't get those cuts, kind of, where do you see opportunities in the markets? Either equities, fixed income, what's kind of your go-to trade these days?
Now, if we have a disinflationary situation, it's going to weigh on stocks, right? So small caps, I know we've seen a little bit of a bump up. We see a bump up today. I think it's going to continue to be pressured. Anything that is cyclical or anything that is very much interest rate dependent, I think we're going to see some pressure there. Stocks in general, I think disinflationary forces are not necessarily good. In the bonds, the yields are still pretty attractive. So I think if you're clipping coupons, I think you can still be there. And if the Fed is cutting slowly, those coupons are still going to stay attractive because we're talking about 5.25 to 5.5% in Fed funds rate. At some point, it'll become less attractive, but I think the PPI number today suggests potential weakening. We're also talking about margin pressure as well for companies and for the equity markets. I think there are a lot of headwinds here that we just have to be a little bit more careful about, areas that are a little bit, investors deem to be a little more risky.
Do you feel like earnings reflected that view yet?
No. So what's interesting is we've seen some broadening, right? So we've been talking about Max 7 earnings being the majority of earnings growth for the first 2 quarters of this year, or first quarter of this year, and in the second quarter, we're starting to see some broadening out. I think that is better management, frankly, and cost reduction. The question isn't so much how is the earnings from the past quarter doing? The question is, can they sustain it? Can this broadening of fundamentals actually be sustained in a high interest rate environment for the rest of the year? And that is a big question mark over our heads.
So, the guidance, the earnings themselves this quarter were solid. I think the S&P coming in around 11% growth. What was the guidance for you? Was the guidance enough for you to support this market, or do you think there's risk there from an earnings perspective?
I think there's a bit of risk because the guidance, this is an opinion, but is a little optimistic, right? So I feel like everybody is pricing in a soft landing, except for a few, like Home Depot may not be. So it doesn't really give me a lot of confidence. And frankly, inflation falling is not great for margins. It takes away the pricing power from a lot of these companies. So I think there's a bit of optimism built into some of the guidance that may not be healthy for price action in the second half of the year.
Right, particularly if top line sales don't grow. So if at least the margin's compressing, you need the top line sales to grow. And if you don't get that because the economy is slowing, then you're really getting crunched. In terms of technicality, because you're talking all fundamentals, but what we saw over the last week in many ways was technical in that we were overbought. There was the yen carry trade unwind. Just means looking at the dollar yen chart was truly unbelievable. Like, of course stuff happened if you look at that decline down. Is it over?
I don't think it's over. In some ways it was the obvious trade because that discrepancy was so wide. But I think that there's still leverage in the system that hasn't been unwound. Now, think about it. If the Fed starts to cut, that's another reason for that to be unwound, right? So the Bank of Japan is holding steady. Okay, fine. But if there's leverage in the system and the Fed starts to cut, then there are more unwinding that is waiting to happen. I don't think it's necessarily over. Now, will the market participants be smarter about it this time? Probably. You might not see as big of a reaction, and they may not be caught by surprise. But as to the leverage in the system, I think we're still looking at potentially more pain.
All right, Anna, thank you so much. We appreciate that. Anna Rothbun, Chief Investment Officer for CBIZ Investment Advisory Services. I'm just looking at Top Go, Alex. A couple job cut headlines kind of get my attention. GM cuts China jobs as it resets world top auto market. Paramount begins job cuts as traditional TV market languishes. Are these related at all as it relates to potentially a slowing economy, a softening labor market? I don't know.
But it's interesting because remember, I don't know, let's call it like 18 months ago, it was all about the tech world was laying off people, right? So I just wonder if it's just going through industry, and we talk about how we have a rolling recession in terms of different industries and parts of the economy, and if this is also kind of part of that, because you can make the argument that with Paramount, that is an idiosyncratic part of the economy, right? Like media, traditional TV, that's not great.
No, it's not great. So we'll have to keep an eye on that. But the labor market obviously spooked the market last week. Seems to have stabilized here over the last 3 or 4 trading days. So that's a good thing. So looking at the markets here today, we have a positive day. The S&P up about 0.7%, and the Nasdaq up 1.25%. I'm going to call out Bitcoin from Matt Miller, because I know he's listening, up $400, just under $60,000 per token. Again, it bounced Monday morning last week at 50,000. Mike McGlone said that's probably a technical bottom right there. And sure enough, it bounced higher. With our news, Michael Barr.
Thank you very much, Paul and Alex. The surprise Ukrainian offensive into Russia is still going strong. Ukrainian forces so far have captured several towns and villages and more than 380 square miles of Russian territory in the Kursk region. It is the first incursion by foreign troops into Russia since World War II. Senator Lindsey Graham told President Zelensky he was impressed.
Bold and brilliant. Well done. I'm glad you didn't tell us about it. I'm glad you just did it. And taking this war to Putin and make him understand and pay a price is the right thing.
Ukraine hopes it will be a turning point in ousting Russian troops from their country. Former President Trump and billionaire Elon Musk talked about the assassination attempt and deportations during a chat on X. Trump said he was going back to Butler, Pennsylvania, where his life was threatened.
We're going to go back in October. We're all set up, and the people are fantastic in Butler. It's a great area. These are incredible people.
The highly anticipated discussion started roughly 40 minutes late because of technical glitches. Researchers say that there is water on Mars, tons of it. In fact, there may be oceans of water below the Martian crust, about 7 to 12 miles down inside the planet. It's based on computer modeling as well as seismic measurements from NASA's InSight lander. The spacecraft shut down 2 years ago on the Mars surface, but not before it sent valuable data. Researcher Vishan Wright at the University of California, San Diego.
Mars once looked like Earth 3 billion years ago, and now it doesn't. It's dry and it's desolate. And so a big question is, where's the water? Where did it go? And so finding it there in the volumes that we found it is really important and exciting.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks advancing after U.S. producer prices increased by less than forecast in July. The producer price index for final demand increased 0.1% from a month earlier. Compared with a year ago, PPI rose 2.2%. Now, when you take food and energy out of the picture, it was unchanged in July from the prior month, and core PPI rose 2.4% from a year ago. Tomorrow, we're on to CPI. Right now, let's get to the NASDAQ, up more than 1%, 230 points, 17,010. The Dow up 0.2%, 109 points, 39,467. The S&P 500 up 0.8%, 44 points at 5,388. We have the 2-year yield at 3.96%, down 5 basis points. The yield on the 10-year 3.87%. That's down 3 basis points. Japan's Nikkei, right now that's up nearly 3.5%. It's now recouped its losses from last week's rout. Over to currencies, we have Japanese yen at 147.12 against the dollar. To commodities, oil rising for 5 days as traders weigh concern over escalation in the Middle East conflict against that prospect of a potential surplus. So right now we have Brent crude $81 a barrel, WTI crude $78 a barrel. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We're broadcasting to you live from Interactive Broker Studio right here in Midtown Manhattan. Let's go back to some of the earnings here and go to Home Depot specifically. I'm taking a look at that stock. It is up by about 0.3%. So they did cut their outlook, saying that consumers are in their, quote, deferral mindset. I mean, to me, it begs the question, though, once things get better, is it just delayed purchasing? Or am I never going to redo my floor? I know. Yeah. I agree. Okay, so let's get some more details here with Red Brown, Bloomberg News earnings reporter. He joins us on Home Depot. All right, Red, walk us through some of the numbers here.
Yeah, I mean, so I think overall kind of the message that I'm sort of taking away from the results is this seems like they might have kind of found bottom. If we look the last 6 quarters, they've seen earnings top and bottom line shrinking, and then for the first time since 2023, things are flattening out a little bit. So yes, they cut the top line outlook, maybe a bit of a reset there, but I think there's a lot to be optimistic about these results.
Well, I think I guess one of the questions that I had, just being a grizzled veteran, having listened to a million conference calls, is, suggesting that maybe this is a little bit temporary, that maybe these are purchases that are being deferred in anticipation of lower rates. How does that kind of stand with you?
I mean, I think it does. I believe it a little bit more than it sounds like you two might, just because the one thing that analysts are pointing to a lot is contractors' backlogs. So those are, contracted projects that they are expected to eventually fulfill. It's just a matter of when the customers are ready to actually, follow through with that and say, yep, let's do it. Those are long-term projects, take several months, so it's not something that people are kind of likely to back out of. They're big. It's something that you probably need to get financing for as well. So it's a significant commitment for the consumer. This deferral mindset, I think, is an interesting way to spin the situation for Home Depot right now.
Yeah, that's interesting. So you have contractor backlog because customers want to get their project in the queue, but they're not putting down the money for it yet. So it's always like, is that going to wind? If the economy really turns, what winds up happening? So I guess if we just say, okay, we're at the trough, I wonder if we have any visibility yet into what the recovery then looks like for Home Depot.
Yeah, so I think, if we look into what they said, the commentary around the guidance cut. So right now they said if it's going to be the same-store sales, the top end is down 3% this year. They're saying that will happen if things stay stable from the first half of the year. And right now they say all signs point to consumer demand staying at that same level. They're not guiding towards the bottom end of that range right now. So right now that seems to be where the company is at. And I think we can see, the market seems to kind of be digesting that with some positive outlook here as well.
I'm just looking at the chart here and just thinking back to the pandemic. That stock, was up about 170% from, the beginning of the pandemic through the end of 2021. It's come off since then. So that was just such a moonshot for the company. What does the company say about the consumer or their business kind of now versus pre-pandemic? Did they ever put it in that kind of context?
Well, the reason for that ride up, if you remember, was because of so much DIY activity. Everyone was stuck home. I mean, I'm tired of looking at this shelf. Let me fix it. Right. Or I hate this paint color, whatever it was. Now, there's a little bit less of that just because we're spending less time at home. You know, we have less time on our hands. And if we, and Home Depot is kind of accepted that they're not going to see those levels as much anymore. And what they are focusing, and the similar thing happening at Lowe's as well, is focusing on that contractor business. It's a higher margin business. It's a little bit more consistent. And we saw with their latest acquisition, an $18 billion acquisition for SRS Distribution. And that is part of this pivot towards, can we capture more of the market share for those contractors?
Oh, yeah. Love me some contractors. Working with some right now in the Berkshires. The allowance for my kitchen island was huge.
Are there good contractors up like in that part of the world?
Yeah, really
okay,
good. Yeah.
Okay, good.
I mean, we went to one, we didn't do like comparison shopping because this company had like redone our roof, did our kitchens. Like we'd already worked with them for the last, 10, 15 years. Red, when you take a look at earnings in general, so you're earnings reporter, like this is your jam. What are some of the takeaways that we can learn from earnings in general right now?
I think with Home Depot, and we'll see with Walmart later this week, it's just a kind of repetition of this same pattern in retail, which is consumers are trading down. Last year there was so much, when is it happening? When is it happening? And it's kind of been slowly trickling in quarter over quarter. More people are trading down, or what that looks like on the ground is I'm delaying some of those bigger purchases, those bigger high margin for the company's purchases. I'm focusing on what I need. And I think Walmart will be the kind of example of that. Of people, I'm just looking at, what I need. I need food, I need groceries, I need toiletries, things like that. And then maybe I'll delay until I get a little bit more clarity on when I'm going to buy that TV.
So for Home Depot, I just think of walking into a Home Depot, and boy, there's a lot of stuff. They're huge stores, and there's a lot of stuff there. Talk to us about inventory management. I know for some of these big box retailers, it's huge. What are they saying these days?
So one thing to look for, the inventory, is actually the transportation costs have been coming down. So I think overall that just speaks to an easing of the supply chain for Home Depot. So they are able to manage a little bit better. In general, they're managing their costs quite well. That's part of the reason that they were able to kind of flatten out the earnings trough there. And yeah, I think overall, the inventory has been shifting well, and they have so much stuff, they're able to manage it well, and they're able to get the products that people want in the stores.
All right, Red, thanks a lot. Super appreciate it. Red Brown, Bloomberg News earnings reporter, joining us on Home Depot. That stock up just a smidge. Here was also interesting. Today is the wonderful day we get the Bank of America Fund Manager Survey, and I love this. It just gives us a nice read as to how fund managers are thinking about things. So apparently, 55% say monetary policy is too restrictive, which is the highest percentage since, guess what, 2008.
Really?
Yeah, that definitely feels like then that is a waiting for a Fed cut. 93% predict lower short rates, and 76% expect a soft landing.
Okay.
So is that too consensus now?
I was about to say, that sounds too good, almost.
Right.
And I wonder was this done, I guess, before or after last Monday? There's a little bit of a shock.
See. Probably before.
Yeah.
I'm saying that because I'm assuming they do it monthly and then it comes out, but I actually don't know this for sure.
Okay, I'll have to answer, because that would a change in expectations or a change in mindset for a lot of investors last Monday.
But what I will tell you is that on the same day, Bank of America said that their clients were net buyers of U.S. equities last week for the first time in more than a month, and institutional investors had about net purchases of $5.8 billion in U.S. stocks, even though hedge funds and retail offloaded some shares. But nonetheless, clearly there was, for institutional investors, a buy-the-dip mentality last week.
Yep. All right. Very interesting. I mean, I think we saw it just looking at last week's trading data, that big sell-off Monday morning, if you remember back.
Oh, I remember.
And I felt like, talking to Matt Miller at our desk at 6 a.m., boy, it feels kind of panicky out there. We were looking at what's happening in Japan, what had happened with the yen and the Hang Seng, the Nikkei. And then, by midday, the sell-off had kind of abated, and we kind of ended down 2 or 3%, and then we had a pretty solid rest of the week. So it kind of felt like it kind of got flushed out, and maybe it was more technical than a fundamental reset of expectations. So, and maybe we've seen that here with some of the trading here early this week. S&P 500 up another 1% here. The NASDAQ up 1.6%. So what's interesting there. The Russell lagging, though, so that rotation trade into some of the smaller cap names seems to have played out a little bit. We'll keep an eye on that. 10-year Treasury yields down 3 basis points, 3.86%. 30-year fixed mortgage. We're down to 6.55%.
That's not good enough for you.
Not good enough, but we're getting there.
But you heard what Anna was saying. CBIZ?
Yep.
4%.
Your company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. As you've been hearing here on Bloomberg, Starbucks has named a new CEO and chairman. The company appointed Chipotle's chief, Brian Niccol, as its next leader. Now, he'll start September 9th. The leadership shakeup comes after activist investors Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Elliott Investment Management coming out with a statement saying that it views today's leadership announcement as a transformational step forward for the company. Right now, we have Starbucks up about 21%. Chipotle, though, down about 12%. To earnings, where Home Depot cut its outlook on weak housing demand. The company says high interest rates, inflation have really pushed consumers to hold off on buying homes or even looking into bigger renovations that need financing. You had comparable sales fell 3.3%, the seventh straight quarter of declines. Now that dropped worse than Wall Street's expectations. Adjusted earnings per share, that came in slightly above estimates for the second quarter. Home Depot now up about 0.2%. And it's a big day for Google. Today, its annual flagship Pixel smartphone launches. Now, the company moved up the date from October to try and get a jump on Apple's annual iPhone launch. We have Google up about 0.7%, Apple up more than 1.5%. And China's Huawei Technologies close to introducing a new chip for artificial intelligence use, overcoming U.S. sanctions. Now, sources telling the Wall Street Journal the company told potential clients that this new chip comparable to NVIDIA's H100. Right now, we have NVIDIA up about 5%. Johnson & Johnson reportedly closer to settling lawsuits filed by thousands of people who claim that J&J baby powder gave them cancer. As sources say, more than 3/4 of the plaintiffs signed off on a $6.5 billion settlement. J&J down more than 1%. And that is your company news at this hour. I'm Lisa Mateo, and this is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We are broadcasting to you live from our interactive broker studio right here in Midtown Manhattan. Also, check us out on YouTube as well. Let's get you up to date here with world and national news with Michael Barr. Michael?
Thank you very much, Alex. Paul, Lisa, Donald Trump and Elon Musk held a warm but glitch-delayed conversation on X that saw the tech mogul pitch a role for himself should the Republican nominee win a second White House term. The discussion started 40 minutes late and stretched more than 2 hours. Henrietta Trey's managing partner at Veda Partners spoke on Bloomberg.
I think that the audience only heard things that were repeats of what we hear from Trump on the campaign trail. So I'm not sure that there would be a novel opportunity to reach an independent or disaffected voter, someone who's only casually attuned to politics. You'd have to be pretty plugged in and engaged to even know that that interview was happening last night.
Henrietta Trey's managing partner at Veda Partners, Musk called for a government commission to ensure that taxpayer money is spent effectively and wanted a role in that effort. The surprise Ukrainian offensive into Russia is still going strong. Ukrainian forces so far have captured several towns and villages and more than 380 square miles of Russian territory in the Kursk region. It is the first incursion by foreign troops into Russia since World War II. Meanwhile, the State Department says the U.S. is aware of reports that Iran is planning to deliver ballistic missiles to Russia. State Department spokesperson Vedant Patel.
As we and our partners have made clear, both at the G7 and at the NATO summit this summer, together we are prepared to deliver a swift and severe response if Iran were to move forward with the transfer of ballistic missiles, which would, in our view, represent a dramatic escalation in Iran's support for Russia's war of aggression against Ukraine.
State Department spokesperson Vedant Patel. Tropical storm Ernesto threatens to trigger floods and landslides across Puerto Rico and will test the island's electric grid, which has been battered by storms in recent years. Ernesto, the fifth Atlantic storm this year, had top winds of 45 miles per hour as it crossed the Leeward Islands. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, Lisa.
All right, thanks so much, Michael Barr. So here's an interesting story that caught both our attention here, Paul and myself. Nantucket apparently is freaking out because Vineyard Wind had a broken blade that then polluted Nantucket beaches, and then it had to shut the beach for, 24 hours, I think, for swimming. But residents are really up in arms about this and apparently even likened the incident to an oil spill.
Really?
Yeah.
That's a little dramatic.
I mean, an oil spill ruins the wildlife and stays for years. Just ask BP. This might be different.
Our friends up in Nantucket, I think, a little soft, thin-skinned maybe a little bit here. You want to see some issues at the beach. Come to New Jersey about 30 years ago, 40 years ago.
That's fair enough.
Then you had something to Jersey Shore. But I mean, you think about it. Off the coast there of Massachusetts, that's going to be, if there's a great place for a wind farm, that would be it.
That would be it.
They have some great winds out there, and that might be, a source of new green energy.
Yeah. So apparently this is Vineyard Wind's project, the south of Nantucket. It's a marquee venture for the industry because it's a massive build out of wind energy that would be zero carbon electricity, right? Well, apparently federal regulators now ordered Vineyard Wind to halt construction and electricity production after this accident. The company, along with the turbine maker GE Vernova, said Friday they are focused on cleaning up the debris and removing what's left of the broken blade and restarting operations. And to your point, this is a tough one because offshore wind is in some ways a really easy solution, but it is so expensive. It does not have the same economics as onshore wind. And then you have stuff like this. That's not good. And there are some wildlife concerns. There are oceanic concerns. There are issues out there related to it as well.
Ever been to Nantucket?
No.
It is spectacular.
Okay.
It really is.
Isn't it like Martha's Vineyard but different?
No, it's. I think it is different. It's very different. It's probably more upscale, if you will, less rural. But I mean, I think it's just spectacular, but it's 2 months out of the year you can use it.
Yeah.
I mean, their season doesn't start till July 4th. It's no Memorial Day, so it's a very short season. But boy, beautiful, beautiful place. Certainly, our good friends in Nantucket. This is good.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Will Hoffman, Bloomberg Intelligence Senior Rate Strategist. He's an associate over there, works with Ira Jersey. See what he thinks about this inflation data we're getting this month and what the Fed may do as well. James Demmert, Chief Investment Officer at Main Street Research, will get his market call as well here. Kurt Warner, Bloomberg tech reporter, talks to us about what we actually watched that Elon Musk, Donald Trump interview last night. He'll give us his thoughts. I was watching the Yankees get crushed by the Chicago White Sox, who had won like 19 games all year, 12-2. That in and of itself should be the lead story on every broadcast. I think that Yankees losing to the White Sox. But anyway, there you go. So we got a lot of stuff coming up right now, but let's kick it off with Lisa Mateo on the Bloomberg Business Flash.
You got it. And we have some reassuring data on U.S. inflation. The government's producer price index, it increased just 0.1% in July, reflecting this decline in service costs. The first this year. Goods costs, they were up, though, due to higher food and gasoline prices. Now, tomorrow, we have the government that's going to issue a gauge on the cost of living, the Consumer Price Index. Thursday, July retail sales, the weekly report on initial jobs claims, and also industrial production. And then Friday, we'll get a look at housing starts and consumer sentiment. Now, speaking of sentiment, Main Street America seems to be a little bit more upbeat about the economy's prospects. The U.S. Small Business Optimism Index, well, that's up. It's running at the highest level in more than 2 years in July. Owners a little bit more upbeat about sales, the economic outlook, and fewer plan to raise prices. Even so, inflation, though, still remains a big worry on their minds. Stocks right now advancing after a fairly flat day on Wall Street. NASDAQ up more than 1.5%, 271 points. The Dow up 0.4%, 162 points. And the S&P 500 up about 1% at 53 points. We have the 2-year yield at 3.95%, down 6 basis points. The yield on the 10-year, 3.85%. That's down 4 basis points. Quick check of commodities. We have spot gold lower, $2,471 an ounce. Brent crude, $81 a barrel. WTI crude, $78 a barrel. That is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, Lisa Mateo. I'm Alex Steele alongside Paul Sweeney. It is Tuesday, right? It's not Wednesday. I've been like a day ahead for like weeks. I don't know what this tells me about where my brain is. Okay, so we're definitely having a reaction to that PPI number coming in a little lighter than estimated. We get the CPI tomorrow. We're definitely having that buy stocks, buy bonds, sell the dollar kind of reaction. But there are also some really fun individual movers that I thought we could highlight as well. And for that, we go to Bloomberg Equities reporter Nora Melinda. Not hit it, but Starbucks and Chipotle.
We can't not hit it. So if you're just joining, we're talking about Starbucks and Chipotle, and these are seeing a bit of an inverse relationship when it comes to percentage moves. So we're seeing Starbucks as the biggest gainer in the S&P 500 today. Chipotle is the worst laggard in the index, but we're seeing shares of Starbucks up 22%. This is their biggest intraday jump on record, and this is coming after that CEO news that we heard earlier this morning. It's outstaying its CEO and taking on someone from Chipotle, Brian Niccol, who will be assuming the position of CEO and chairman at the company. I was reading through some commentary, and the board chairman, or the board chair, Melody Hobson, she's also co-CEO for Ariel Investments. She said that Starbucks initiated discussions about company leadership several months ago. So she's essentially shrugging off claims that activist investors and other outside forces like Elliott had any influence in terms of playing a part in this decision.
Yeah, I don't know about that. I mean, the activist investor, it's been a good day for those activist investors in Starbucks because this is oftentimes something that they want to see, a change in management,
Definitely.
a change in strategy, a change in capital structure, something along those lines.
What they've been calling for.
Yep, exactly right. Good stuff for.
Also, that really sucks for that one CEO. Like 1 year in the job, and it's like later, no thanks.
And then the stock goes up on your departure.
Right.
And
everyone's calling out your name.
Yeah, and I can't remember a CEO switch having this big of an impact on not one but two companies. It's boy, I guess it goes to this guy's pretty special. Okay.
And I also can't remember a time when we didn't get a leak.
Yes.
In a big way about something like this as well. Now, let's go to Paramount. The stock is down just 0.3%, but Paul highlighted this, that the job cuts are here now.
Yes, and we're seeing this. I was also looking at General Motors that had some news coming out similarly. But Paramount is saying that it's going to be beginning laying off staff after last week. They said that they plan to slash 15% of its U.S.-based workforce. That's about 2,000 positions. Yep. Of course, when we really think about traditional television, that's really been waning, especially as you have viewership, and it has really been a struggling industry here. So not too much of a surprise when we think about them seeing a bit of a pullback here. But as I'm looking at Paramount, we have shares down 30% year to date and down nearly 80% over the last 5 years. So really a struggling name here.
Yep, about to get this, close that, I guess, that deal with Skydance Media. So there's a lot of changes going on there, Paramount. And we saw Warner Brothers Discovery. They also took a write down. So a lot of traditional media companies writing down the value of their, what we're now referring to as legacy assets.
Right, legacy.
I mean, back in the day, legacy asset was a newspaper, was a magazine.
But here's the thing.
It's a TV network and a cable network.
As we know, working in media, like if you still have a product, you still need humans to like put it on. So where do these cuts come from? And then I'm genuinely interested into what actually happens with linear TV.
Yep.
Like, what does that turn into? I mean,
I think you can see it in this fall season. There's very little scripted content going on broadcast television, and what you're getting is a lot of very cheap,
reality TV
type thing, game shows, all that kind of stuff that's coming into prime time. So basically, that's just, and that comes way cheaper, and that's what you're getting. And so anything that seems to be scripted or requires any kind of real investment. And it's a new product that's going on the streaming services.
Yeah, and it's interesting when we think about streaming more broadly, though, especially in the news sense. We did see a lot of companies really rushing into streaming and trying to create this product, but then not seeing a pickup on the other end. So it's really interesting to think about how that looks moving forward as well.
Yep, not bueno.
Yeah, that's painful. Although more Survivor, so I like that for me. Okay, and On Holdings is your last one. That stock is up over 4%. So this makes. What are the cool shoes this makes again?
Okay, so I should know this, but
You're young and cool.
I know. I don't wear their shoes. I don't wear their shoes. But I do know that they're really trying to compete here with Adidas and Nike. We're seeing shares up as much as 7.5% on the day. This is the most intraday that they've seen since May of this year. We've really got consumers rushing to buy their running shoes. They have a lot of lines, including training apparel, that they're really in focus and known for. But we have shares of this stock. They're up more than 50% in this year alone, and 72% if you look at a 5-year span here.
Wow. Okay. Well, so really, no. What shoes are they?
What are they?
I don't know how to. I wish I could show you all this picture of Zendaya wearing their shoes, but you said who's Zendaya?
Okay, even I know who she is.
Oh my goodness! Now we need a whole nother lesson. What is Euphoria? She was on Disney Channel.
Dune.
Okay.
She's a Disney Channel star.
Disney.
Yeah. And she only has one name, so therefore she is super cool. Yeah.
Okay, I got you.
But she's wearing the sporty shoes here. Everyone take a look on your Google.
There you go.
We appreciate that. All right, thanks a lot, Nora. We appreciate it. Nora Melinda joining us from Bloomberg News. Okay, let's get to the economic data here because PPI came in. It was up just 0.1% on a month-on-month basis, and that wasn't as high as maybe we had estimated here. You also, that disinflation narrative still contributing there. Although, services rolling over a little bit, but goods moving up a little bit. I just want to point that out. Joining us for more is Will Hoffman, Bloomberg Intelligence Senior Rates Strategist Associates, joining us. Okay, the bond market, though, made its decision. We're just going to buy and rates are going to go lower. What do you think the band is for the 2-year now at this point?
Thanks, Alex, for having me. I think we pretty much tested the lower band of it here last week. There were some massive moves across the curve, and I think the market was really looking today for a bit of a confirmation with the month-end PCE print. We got about 30% of the data from today's PPI. And that's really what people are looking for is, are there risks to that 0.2% month-over-month consensus point for core as we stand?
Looking at the yield curve, the 2s and 10s were inverted, but only by 10 basis points. And again, a week ago, Monday, we were disinverted for, as Tom Keene would like to say, a cup of coffee. Will, what are your clients saying about the yield curve here? What are they reading into it?
Absolutely. It's very much, I'd like to put it in the Somm rule category of one heck of a track record, but we'll see if this time's different, which is always something dangerous to say. We did uninvert for a cup of coffee, but the real question comes with where the rest of that disinversion, or I should say uninversion, or aggressive steepening comes from. We still say the path of least resistance is steeper curves as the Fed starts cutting.
And is that going to be sort of that bull steepener where we're just going to see a ton of buying on the front end, or is that going to eventually be the long end selling off as we get into more growth scares?
Another great question. There's a lot of hand-wringing around the amount of debt outstanding in the U.S., and from our side of the fence, we think it's more so going to maybe weigh on yields in the long end as we rally. So maybe you won't get as much of a pronounced rally as we cut as you would otherwise. But two should lead the way on this one. The curve is dominated by Fed policy, really no matter where you look at it. And that's what we're looking for to continue.
Hey, Will, what rate nerds like you and Ira, what do you guys think, or how do you think the Fed's going to proceed? Once they start cutting rates, is there a kind of a plan for how they do it, like once every meeting, every other meeting, and 25 basis points, 50 basis points? What's the playbook?
Absolutely. It's something that was taught to me very early in my career was the Fed is an escalator up and an elevator down. And that is really what we're looking at starting in September. Is we're currently priced for a full 25 basis point cut with about a 40-60 probability of another cut on top of that. So make it a 50 basis point move for the meeting, but that's more in the Fed's wheelhouse. But again, it's based on recessionary environments for the last few cycles. And if that's not something we get, if it's just a slow moving classic macro cycle where it's just a grind lower in growth and inflation, then maybe we're not in for those.
It's one of my favorite questions, positioning. After what we've seen in the last couple weeks, whether it be short covering or true buying, et cetera, I'm wondering how clean or not positioning is within the bond market.
Another great one. It's positioning is one of those very squishy topics where it's almost impossible to get a perfect picture at any one point in time. We did just get some information from the JP Morgan client surveys this morning, which pointed to just an abrupt move across what type of money you're running, essentially, where some people use the opportunity to get long and hope that momentum continues, where others were very much caught offsides with some meaningful shorts on. And I would go out on a limb here and say those are no longer as robust as they once were.
Exactly. All right, Will, thanks so much for joining us. Really appreciate it. Good job there, young man. He's a senior associate in that Ira Jersey whole camp of rate geeks down there in Princeton for Bloomberg Intelligence. They really know what's happening there. They really give us great insight to what's happening at the Fed and in the Treasury market. He is a graduate of the University of Delaware. Guess who else on Global Wall Street is a graduate of Delaware? Liz Ann Saunders.
Oh, look at you. Yeah. How do you remember that?
This
is like your thing.
We chatted about it. Yeah, so anyway, she's a big alum there, so that's cool stuff there. So again, we got the 10-year Treasury coming in about, I don't know, almost 5 basis points here, 3.85%. Apparently, former President Trump had a discussion last evening, and I think Tom Keene rightfully said it was not an interview per se, because Elon Musk is not by definition a journalist, so maybe the better way to phrase it is a conversation with Elon Musk, and we'll get the latest reporting on that. Kurt Wagner, Bloomberg technology reporter, joins us. Kurt, anything from your perspective that kind of jumped out of the discussion? I think it was almost 2 hours, former President Trump with Elon Musk here last evening.
I believe it was more than 2 hours. It was definitely long. It was also 40 minutes delayed because of some technical glitches on X. So they weren't able to actually, get this thing started on time. So it was a very long discussion, very, in classic both Elon and President Trump fashion, sort of rambling on about certain topics, 15, 20 minutes on a particular thing. I think, if there are any takeaways, it's kind of stuff that we already knew. One, Elon Musk is all in on Donald Trump. He's, turning this platform into sort of a promotional service for the former president, giving him as much reach and distribution as possible. And two, they're trying to set up a working relationship, right? Elon sort of suggested, hey, if you win, why don't you bring me in to help sort of run this commission that doesn't yet exist, where maybe we'll, review how the government spends taxpayer money. Like, I would love to be involved in that, right? I'd love to work with you on regulation for electric vehicles, things like that. So I think just watching these two build that relationship was really the biggest takeaway. I don't think people necessarily learned any new kind of policies or ideas that we haven't heard before from President Trump.
So this is what I find just totally confusing. Clearly, Musk is anti-Kamala Harris. He made that very clear, that would be really bad for the economy. But Elon Musk lives and breathes stuff that benefits from the IRA, whether it's EVs, whether it's battery storage, whether it's space stuff, whether it's building out charging networks. And President Trump doesn't like EVs. He's made it really clear that he doesn't think there should be any mandate, that it should be sort of buy the car you want. He's very supportive of internal combustion engines. So I literally don't understand where the common ground is there.
Well, I think this has been sort of the biggest question mark about this relationship from the get-go, right? Is that on paper, Elon Musk should care about a bunch of things that Donald Trump does not care about, right? And not only things, but very important things, to your point, the environment, electric vehicles, the future of that industry. But what you see, or what I feel like I've seen, is Elon Musk sort of pulling Donald Trump more into kind of the the positive EV territory, right? Trump last night started to kind of praise Elon Musk as a great mind, someone who's thinking about this. I think at a rally a few weeks ago, he said something like, well, I have to support EVs now because Elon Musk is donating to my campaign, right? So you're kind of seeing this main issue that you would think would be a rub between these two, and you're kind of seeing Trump, it feels like to me, move slightly in Elon's direction. And maybe that's the play, right? Maybe they align on a bunch of other stuff, and he thinks, well, with my money and my endorsement and my support, I can bring him to my side of the table on EVs. Because, as you point out, Tesla's whole future sort of, is dependent on these types of regulations and this support. So it'll be very interesting to see when push comes to shove, if Trump actually delivers the things that Elon probably needs on the Tesla side.
Real quickly, Kurt, what's kind of the bottom line coming out of Silicon Valley these days in terms of this election? I've seen prominent people in the Valley come out for both candidates. How do you think it's shaking out?
I think, a month ago when there was the assassination attempt, it very much felt like, people who were supporters of Trump felt emboldened to come forward. They weren't worried about the social stigma of sort of being someone in the tech industry and the left-leaning California to come out for Trump. It feels to me, I've just observed sort of like you guys have, but it feels to me like that's really swung in the last 2 weeks for Kamala Harris. A ton of VCs, a ton of investors, folks who are thought leaders in this industry are coming out for her. She has the California ties, obviously. So I do think it's still a predominantly blue industry. I just think that, we are seeing sort of a momentum shift and a emboldened group of investors within the tech world that are suddenly feeling like, okay, we have someone we can rally behind that they didn't have a month ago.
All right, Kurt, we appreciate it. Did you watch the whole thing?
I listened to probably 90% of it. Yes. So it was a long night. And yes, it was a long night.
It's like, I'll leave it there. It was a long night. That was pretty smart of you, Kurt.
Yeah.
All right, Kurt Wagner, that does feel like a long night. Bloomberg tech reporter joining us there. All right, coming up, we're going to get back to the markets and break it all down with James Demert. He's Chief Investment Officer over at Main Street Research, to discuss his outlook on the markets as we're headed into a nice chunky week here with the CPI tomorrow. Then you got Walmart, then retail sales, then my favorite, UMich.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have stocks on the rise, bond yields falling after the latest inflation reading reinforce those bets that the Fed will be able to lay down an interest rate cut in September. We shall see. We'll go to the NASDAQ, up more than 1.5%, 290 points. The Dow up 0.5% at 191 points, and the S&P 500 up more than 1% at 56 points. We have the two-year yield at 3.96%. That's down 5 basis points. The yield on the 10-year 3.86%. That's down 4 basis points. To the housing market with the real estate industry data, it shows that U.S. housing was less affordable in the second quarter. It's a report from the National Association of Realtors. It shows the price of a starter home, it rose to almost $359,000. Now, given current interest rates and a 10% down payment, that means that a monthly mortgage would run at about $2,200. Shares of Tesla, they're higher. They're up more than 3% right now. This is a day after Elon Musk sat down with Donald Trump for that conversation on X, where he asked about the former president's supporters to stop demonizing EVs. And we have shares of Trump Media. They're down more than 3.5%. That is your Bloomberg Business Flash. Paul, over to you.
All right, Lisa Mateo, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube, so head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. I noticed that the Mortgage Bankers Association 30-year fixed mortgage is now 6.55%. So coming down from north of 7, but a lot of folks in the real estate biz says it's got to come down even more to prompt some of these people to get out of their homes and maybe provide some more liquidity to the used housing market. Let's talk about the stock market here. We got a nice run coming off of those that really disturbing Monday a week ago. We found markets kind of found some footing here. We're up about 1%, as Lisa was just reporting on the S&P 500. James Demmert, he does this investing thing for a living. He's a chief investment officer at Main Street Research, joining us from New York via Zoom here. James, let's put into context here. We've got a little bit of a rearview mirror now. We can think about a week ago last Monday, the volatility the market experienced here, and then seems to, again, found its footing since then. What happened?
Yeah, Paul, thanks for having me, and hi, Alex. That was panic button for sure. Last Monday, market down 1,000 points, and I think that investors mistakenly looked at that as blood on the streets or a panic, when in fact, in our view, that was an invitation, one of only a few we've had this year, where that momentum of upside in the market just sort of gave way to what I would call, in our team, a normal correction, but at high speed, right? So, these kind of 8 to 10% corrections usually take 3-4 weeks, and we're sort of lulled comfortably into the lower market levels. We got all of it within 10 days. Investors just really weren't ready for that. But relative to norms, that was a normal pullback, just that turbo speed. We don't think it in any way sort of stops or impedes this bull market, this new business cycle that we see.
Why are you so convinced that this was just a decline in a bull market versus something more serious longer term?
Yeah, Alex, and I think that's a really good question. Investors, to try to get themselves away from being psychologically drawn into the drama of the decline, focus on metrics to remind ourselves to keep an even keel psychologically. And when we do that, what the ingredients of these new bull markets are valuation. You want to make sure our stock's reasonably priced. Is this the beginning of something worse? And valuation across most stocks, AI excluded, is around 16 times earnings, which is historically reasonable. Another thing you want to think about is the economy growing. And yeah, we are growing at north of 3%. So that checks the box there that, recession is a long way from 3% growth. Corporate profits, very important, goes along with economic growth, better than expected. One thing I think that investors really should have thought maybe a little bit better about last week was, where is Fed policy going? Fed policy is a really important ingredient to keep the bull market going. And we've gotten some data, today, the PPI, right, a little lower than expected. And even data past Friday, when the market didn't like that data about employment. But what that data told us is the Fed is ready and willing to lower rates. Those little metrics I just mentioned there is really the support that investors need to know, hey, this market decline isn't panic, it's an invitation to the beginning of that next leg upward, which we think goes to 6,000 by the end of the year on the S&P.
Wow.
Whoa.
That's a nice round number. I like nice round numbers. What's going to get us there, James? I mean, as long as I can been in this game, it's been technology kind of leading this market. And I guess given the market cap of some of the big tech names, is tech going to lead us to that kind of level, 6,000?
Yeah, the wow factor of 6,000 still exists, but it was a lot more fun to say it last Monday. But, we think what leads us there is, first of all, corporate profit growth, right? We continue to see earnings come in way better than expectations. And we think the Fed policy is really going to, I don't think they're going 50 basis points. I think they're going to tap the accelerator on rates, go 25. That'll keep people comfortable. And that's going to be the big fuel, what I call that booster for the next leg up. But, I think also valuations are cheaper now. You've got $6 trillion not in the market that should be. That money, I call FOMO fuel, is probably going to come in once the Fed goes and has a nice message about the economy. I think that money comes. I think it's a big rocket fuel to get to 6,000 by the end of the year. We're also saying Dow 100,000 in the next 6 years because we're in the early phase of this bull
But
market.
that doesn't sound like that's a purely AI tech call at all. That sounds like that's a broadening rally gets us there.
Yeah, Alex, thank you. I do think that there's lots of momentum left in AI. The appetite for spending is still there as we go through the conference calls and earnings. But I do think also, and the team sort of supports us on this, that the Fed lowering rates is really going to be the real trigger for the market to broaden, right? Lower rates, you just mentioned mortgage rates, that's helpful there. The banks are going to benefit from real rates coming down, as opposed to speculating that they will. So we think that the September cut is going to be the real fuel that, wow, a rally till the end of the year, probably led by tech. That's where the market cap is. But I think here you're really going to see the small stocks, the financials, the industrials, all be part of this great invitation to this party that we're headed towards the end of the year.
Earnings cycle here. We're starting to get to the tail end of this earnings cycle here, James. Any takeaways for you this cycle?
It's sort of the same story over and over the last few quarters where you've got the technology companies beating expectations. Those expectations have been risen, so you had a little murkiness there. I think that that's going to continue. This earnings season, I saw some great numbers in the financials, particularly like the JP Morgans that didn't rely so much on interest expense. So I'd say that, again, earnings were better than expected this last quarter. I think with Fed policy, we're going to continue to see the same thing in the fourth.
I know you're probably going to hate this question. Where could you be wrong? Like, what are the cases where we don't get to 6,000? Is that a Fed behind the curve? Is that an exogenous event? Is that AI hyperscalers kind of pushing back? Where do you game out your bear case?
Yeah, Alex, I spend half my life second guessing.
Okay, good.
And I think it's important for investors to use, things like risk management tools, stop losses, to mitigate, risks that are there. And, I think the risks here are the Fed either does nothing. So Fed policy is a big risk. If the Fed does nothing, I think that's going to be very bad for our whole view of 6,000. I also think that the Fed going 50 basis points or something, too extreme, that also is a risk. You don't want to scare investors to thinking, gosh, they're going 50 because the economy is too weak, because frankly, it isn't. So I think, we want to see the Fed be really specific with that policy. That is a risk. The geopolitical risk is clearly there. It's increasing. I think investors really want to be, monitor that like our team does. The thing with, Israel and Iran and all around the world, we have all these risks. The election's coming. That's going to make people jittery, though elections typically don't cause risk for index markets, maybe some sectors. So we want to be careful of watching all these things. And then there's always the stuff we don't know, right, which is a risk. So again, use some risk management tools. But those underpinnings we mentioned earlier: valuation, economic growth, earnings, cash levels really high, Fed policy coming in to accelerate the economy a little bit. I think that's going to get us there.
All right, James, thanks so much for joining us. Really appreciate getting your thoughts. James Demert, he's the Chief Investment Officer at Main Street Research. Appreciate getting a few minutes of his time. Again, a solid trading session here today, Alex, with the S&P up 1% and NASDAQ up 1.7%.
And let's look at volume here. I mean, volume's not that great.
Right.
It wasn't that great yesterday either. So I have to wonder, are we just holding positions here until next week, or is CPI actually going to be a mover along with Walmart?
Yeah, looking at CPI tomorrow, I guess, the food and energy month to month, 0.2%. That's kind of the range it's been in for the recent period. On an annualized basis, year over year, 3.2%. So again, a lot better than it was at its peak of, in high single digits. But I think the Fed would like to see that even a little bit lower. It was 3.3% last period. So a little bit of again, kind of moderation in consumer prices.
What I keep hearing a lot about now after the last couple weeks is, where are we with correlations cross assets? So if you have a high cross asset correlation, which had really picked up during the sell-off, then one tiny thing can spark a sell-off overall in most of the markets. If the cross asset correlation eases down a bit, which it looks like it's starting to do, then maybe you won't have that kind of risk. But then you look at dollar yen and it's 147, and clearly it's nothing like we saw last Friday and Monday. But still, nonetheless, if you continue to have a deep slide, does that help the correlations pick back up? And then we start this cycle all over again. We'll discuss. Coming up, Kathy Winter will be joining us. She's COO of May Mobility. Michael Barr here with National News.
Thank you very much, Alex and Paul. Ukrainian President Volodymyr Zelensky's top commander now says the military has seized control of almost 390 square miles of the border region since the attack began last week. Russian President Vladimir Putin is also forced to grapple with more than 120,000 residents who have fled their homes in the Kursk region. The victory garnered a visit from two top U.S. Senators, Lindsey Graham and Richard Blumenthal. Arriving in Kyiv, they praised Ukraine's incursion led under President Volodymyr Zelensky. Blumenthal explained he's working on a law to ensure U.S. support for Ukraine does not waver, no matter who is in the White House.
We are proposing legislation called Stand By Ukraine, which codifies the bilateral security, make sure that it's in the law, not just the president.
The incursion marks the largest attack on Russian soil since World War II. The U.S. believes an Iranian attack against Israel has grown even more likely and may come as soon as this week. White House spokesman John Kirby says the U.S. and its allies have been prepared for what could be a significant set of attacks. Bloomberg's Rosalind Matheson.
Well, that's right. It's interesting, in fact, because we're now, 2 weeks since the killing that Iran, blames on Israel of the Hamas leader in Tehran, and yet there's been no retaliation, even though every single day Iran has said we're going to have to retaliate.
Bloomberg's Rosalind Matheson. Donald Trump recounted his assassination attempt in vivid detail and promised the largest deportation in U.S. history during a high-profile return to the social media platform formerly known as Twitter. Last night's conversation with X's owner Elon Musk was plagued by technical glitches. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Stocks advancing after U.S. producer prices rose in July by less than expected. Right now, we have the NASDAQ up more than 1.5%, 301 points. The Dow up 0.5%, 204 points. The S&P 500 up more than 1%, 58 points. So let's take a little deeper dive. The biggest spike coming from, well, let's go to the IMAP function on your terminal. Of the 11 major industry groups, it's coming from information technology. Then you look a little bit further under the hood, you see semiconductors and equipment, and finally just semiconductors at the top. Yes, it is NVIDIA right now. NVIDIA shares up 5%. Broadcom right behind it. Broadcom shares up about 3%, and that's followed by advanced micro devices. Those shares up more than 2.5%. Let's take it to the bond market. The 2-year yield, 3.97%. That's down 5 basis points. The yield on the 10-year, 3.87%, and that's down 3 basis points. Commodities, oil snapping a 5-day rally. Right now, we have Brent crude at $80 a barrel. WTI crude $78 a barrel. Quick check of currencies. We have the dollar weaker, Japanese yen stronger at 147.08 against the dollar. Euro stronger, British pound stronger, Bitcoin up 1% at 59,000. That is your Bloomberg Business Flash. Paul and Alex.
All right, thank you so much, Lisa Mateo. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance and economics through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We also love going to the C-suite, take a look at different companies all across the world. And for that, we go to Kathy Winter. She's Chief Operating Officer of May Mobility. It's a private company, and she joins us now from Ann Arbor, Michigan. So apparently May Mobility is the leader in the development and deployment of autonomous driving technology. I want to get more on this. Hey, Kathy, does that mean like a self-driving car? Is that what we're talking about here?
Yeah, hi. Thanks for having me. Exactly. We are talking about self-driving cars and the service that we actually go out and provide. So trying to solve like real-world problems, augment existing transit systems, and get these cars on the road so that more people can access them.
Who are the are the customers individuals? Are they cities and municipalities that deploy them maybe like as a kind of a taxi fleet or something?
No, so think of this as what we do is a little bit different. We are more in the B2G space where we partner with local municipalities and governments to come in and cooperate and plan out a system that'll really work and solve their problems. A little bit different for sure than a robo-taxi environment where you're maybe dropping in a fleet of vehicles and customers are calling them on their own, right? So different segment of the market.
So tell me what kind of stuff you're working on right now then. Give us an example of how this would work and how those conversations go with the government.
Yeah, sure. So, well, the biggest thing we're working on is really the technology itself. So we have a patented MPDM. It's multi-policy decision-making solution. And so what that really is about is how we use AI to continuously learn on the vehicle and quickly be able to scale to implement in a city. So what are we doing? We've launched, we actually have multiple sites out there today that are in operation and more slated both here and Japan for the second half of the year.
So Ann Arbor, Michigan, that's one of your deployment sites. Explain to us kind of how that looks. What does that deployment look like in terms of maybe vehicles and things like that?
So Ann Arbor, Michigan is it's a really fun one to talk about because, of course, not just because this is our headquarters, but huge, booming university town. Students are coming back this week. So in this case, we've partnered with the university, the local government, and so what we provide is a service that, if you think about students that don't have cars on campus, it's provided they don't actually pay for it. It's free to them, and they can ride. For example, let me give you. They might not live on campus, so they park for free off campus, and then they can call, there's any number of 30 stops across Ann Arbor. They can call and they can jump in the car and get onto campus and wherever they want to go. It's open to more than just students, but that's a good use case, as opposed to Grand Rapids, Minnesota is a rural community with tons of snow, you can imagine. And they don't actually really have much of a public transportation. So in that case, it's the rural population that doesn't have access. And maybe one other thing I'll mention is we are really proud of our wheelchair accessible vans because, that makes it just so much more accessible to people who didn't have that kind of on-demand service that they could call up.
Yeah, especially because if you do have that on-demand service, it can be so expensive. You're also deployed in Miami, Florida. What does that look like?
Yeah, that's one of our newer ones, and we have 2 big routes down there. So I guess I forgot to mention we have 4 vehicles in like 30 different drop-off areas in Ann Arbor. Miami's one of our newest, 10 vehicles and 2 different sections. So we expect to continue expanding the square footage, but same kind of thing. But again, that's a much, that's hot weather, steamy weather. So we really get between our locations in Grand Rapids, Michigan, where we're Minnesota with snow, Ann Arbor here, multi-seasonal. You got Arlington, Texas, which is really smoking hot this time of year. And then you have Miami, right? Super humid. So we feel like we get the real life commercial tests going in all these different locations.
So what are these municipalities looking for? What kind of problem are they trying to solve for?
Yeah, that's actually probably at the crux of what our mission is to really work with these communities. It might be that, there's not enough traffic to make the business case work for a ginormous bus to be driving around, so they're looking for something smaller. They have areas where they just don't have bus service today, but they want to make it accessible, some kind of public transportation, so we can kind of microtransit augment what might be there. And then I will say a lot of it is around the accessibility for those with disabilities. So Detroit, for example, they just launched, and they are very specifically focusing on senior citizens and folks who have accessibility issues, whether it's hearing impaired, vision impaired, or specifically the wheelchairs. Wheelchairs on demand is just not there anywhere that I know of. You have to pre-register typically, 24 hours notice, could be very costly.
What is some of the community feedback, like the good stuff, but also the stuff that you need to keep working on?
Yeah, that is a good question. I would say we actually take a survey whenever anybody rides. They call it up on their app, or they can call a phone number to book if it's someone who's not, tech savvy with their phone. So 2 ways to book it. And then after every ride, we ask them to rate the ride. And so this is something we also do at the communities is we look at their ridership, look at where they have hot spots that maybe need more vehicles, more capacity. We look to see the quality of the rides. We get extremely high ratings. It's usually, hey, can we even expand the service areas, right? So it's a partnership where we can really share that kind of data and both learn where to expand and where to bring the highest value to them.
What's a typical or what's a target kind of market to open up? What fits your criteria?
Well, one of the things we do, and I think this has been to the success of May being one of the few companies still standing out there and a profitable company, we have profitable sites operating today, is that we start very deliberately with a specific geographic area. We'll work with the community to say, where's your hot spots, where's your trouble? But we also will say, let's stick to 30, 35, 40 miles an hour by the end of the year roads without saying we're going to hop on the freeways and try to map the entire city. So, it's a more measured approach to say, hey, lower risk, let's start here and we'll continue to expand over time. So the criteria, we really are operating in all different climates. That's not really an issue. It's really more just which communities are ready to embrace. Another application would be an airport, for example. So there is some B2B as well. It's not just B2G, but you can think of airports obviously wanting to move people around without having to pay for ginormous, again, shuttle buses. So
interesting. Really great stuff. Hey, Kathy, we really appreciate it. Kathy Winters, Chief Operating Officer at May Mobility. We really appreciate all of that context. Just staying in cars for a sec. So apparently, this according to Barron's, Ford and a Texas utility is making a plan to make charging free for Texas University, Texas customers if EV owners charge during off-peak times of day. So basically it's like, hey, get your EV, because you know what? If you do it in this very strict parameter, you can charge up your car for free.
Right, so starting to get a little bit creative there, trying to stoke demand out there, because again, that's probably one of the gating issues, at least right now, for the EV business.
And you can still charge it in, at home during these times. You just got to pay for it. So that's a quite interesting little thing there from Ford. Okay, looking at the markets, you are definitely seeing the rally continue. The NASDAQ is up almost 2%. This is Bloomberg.
company news headlines on Bloomberg Radio.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. An abrupt shakeup at Starbucks. The coffee chain surges after naming Chipotle CEO Brian Niccol as a new CEO and chairman. Bloomberg's Katie Greifeld has more on the long-term performance of these two chains.
As you take a look at Chipotle, you had Brian Niccol take over on March 3rd, 2020. Since that time, Chipotle shares are up 280%. You compare that to what Starbucks has done over that run, down about 2%. So you think about sort of that black and white picture right here. It kind of makes sense that Starbucks called up Brian Niccol.
And Starbucks up about 20%. Chipotle, though, down about 9%. Home Depot shares starting to edge higher after falling for most of the morning. Now, second quarter sales disappointed. The company lowered its outlook for sales and profit. Bloomberg consumer goods reporter Dasha Afanasieva.
The consumer is so nervous that even the consumer that has the money to spend on a new bathroom, a new kitchen, etc., is actually deferring the spending, waiting for that crucial interest rate cut. And that's what's led to this pretty chunky cut in outlook.
Now we have Home Depot up more than 1%. Now Thursday we'll hear from Walmart. That's the same day we also get retail sales figures for July. And it's a big day for Google. Today its annual flagship Pixel smartphone launch. The company moved up the date from October to try and get a jump on Apple's annual iPhone launch. We have Google up about 1%, Apple up more than 1.5%. Sources say General Motors has been laying off staff in China, planning this larger structural overhaul of its operations there. We have General Motors down about 0.6%. Job cuts, well, they've begun at Paramount Global. The company began laying off its staff this morning after it said that last week it planned to slash 15% of its U.S.-based workforce. We have Paramount Global down about 0.4%. That is your company news at this hour. I'm Lisa Mateo.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news right here from our Bloomberg headquarters in New York. We're also live on YouTube, so check us out. We also keep you up to date on world and national news. And for that, we go to Michael Barr. Michael?
Thank you very much, Alex and Paul and Lisa. Former President Trump had a more than 2-hour chat with billionaire Elon Musk on X. The conversation was plagued by glitches, but mostly rehashed many of the themes from Trump's campaign rallies. The former president railed against illegal immigration.
These are rough people. These are people that are in jail for murder and all sorts of things, and they're releasing them into our country, and they're telling them, if you come back, we're going to kill you. We're going to give you the death penalty or kill you, so they don't want to come back.
And he touched on the economy.
The election's coming up, and the people want to hear about the economy and the fact that they can't buy groceries because they don't have enough money to buy groceries. The inflation has killed them.
Elon Musk pitched a role for himself on a commission on government spending. Trump praised the idea, calling Musk the greatest cutter. After the live stream, Kamala Harris's campaign released a statement saying Trump's campaign only cares about self-obsessed rich guys who would sell out the middle class. Ahead of his scheduled trial in September, disgraced former New York Congressman George Santos goes back to court today in his fraud case. The presiding judge is expected to rule on the prosecution's request to submit some of Santos's campaign falsehoods as evidence. The defense is requesting a ruling for a partially anonymous jury. Santos was expelled from Congress after a House ethics investigation found he engaged in unlawful conduct. He has pleaded not guilty to a 23-count indictment, charging him with wire fraud, making false statements to the Federal Election Commission, and identity theft. Tropical storm Ernesto is battering the Northeast Caribbean as it takes aim at Puerto Rico, where officials have shuttered schools and government agencies. The storm was located about 300 miles east-southeast of San Juan, Puerto Rico, with maximum sustained winds of 45 miles per hour. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul.
All right, Michael Barr, thank you so very much. We appreciate it. All right, if you're a Democratic presidential candidate and you want to raise money in the month of August, where do you go?
Not Nantucket.
Let's go to the Hamptons, shall you? Gina Raimondo, the Biden administration's Secretary of Commerce and a favorite of some Wall Street titans, will help Vice President Kamala Harris raise funds over the Labor Day weekend. The one-time venture capitalist and former Rhode Island governor will be the featured guest at an event for the Democratic presidential nominee on August 31st in Southampton. That's according to an invitation seen by Bloomberg. McKinsey senior partner Liz Hilton Siegel is a host, along with designer Tory Burch, Condé Nast Anna Wintour.
Windtower, what?
Yep.
Windtour,
thank you.
Wind
Thank you.
tower. It sounds like a wind turbine, but
Exactly,
a
I'm
wind
not into the
tower.
fashion
The glasses, come on.
And Aurora James, the founder of the 15% Pledge, which calls on retailers to give shelf space to Black-owned businesses. So looks like it's going to be a big gig here. Tickets for the Harris Victory Fund event start at $2,500 and go to $50,000 for an event chair.
All right.
Ka-ching.
Separately, VP running mate, Minnesota Governor Tim Walz, will be at a fundraiser in Southampton Thursday. So there'll be that as well. Those hosts include Jen Rubio, the Chief Executive Officer, luggage maker Away, her husband Stuart Butterfield, co-founder of Slack, and Lauren Santo Domingo, co-founder of online fashion retailer Moda Operandi. Ticket prices range from $6,600 to $150,000. There was I forgot if it was the Journal or the FT, but that Wall Street is like CEOs are kind of like, on like who to support. I mean, clearly taxes are going to be front and center in corporate taxes more specifically under Kamala Harris, but they're kind of like, I don't know.
Yeah, I haven't seen. I mean, we'll see in the coming weeks and months. But I mean, boy, if you're going to raise money, the Hamptons is not a bad place to be in the summertime. So good stuff there.
All right, well, that wraps it up for me and Paul on this Tuesday. You're looking at a strong rally underway, holding those highs. The Nasdaq at the highs of the session up by 1.8%. Volume, though, still light. We are not through this week where we still have a lot of eco data to wend their way through. Coming up, Joe Matthew with Balance of Power. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Elon Musk pitches himself a role in another Trump administration as Tim Walz courts labor in his first solo outing as a running mate. Welcome to the fastest show in politics this day after the big interview on X. And the UAW now accusing the former president and Elon Musk of intimidating workers. We've got a lot to talk about. And we'll discuss the role that Elon Musk is going to play, already playing in this campaign cycle. Max Chafkin, the co-host of the Bloomberg podcast, Elon Inc. We'll review today's economic data, PPI Day with Bloomberg's Molly Smith. Then we'll hit the trail with our signature panel, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis, along for the ride this whole hour. And it's all after a look at Wall Street. And for that, we turn to Amy Morrison for Charlie Pellet today on the markets. Hi, Amy.
Hi, Joe. Starbucks shares 20% higher. Chipotle shares are down 11% after the coffee chain named Chipotle's Brian Niccol as chairman and CEO effective September 9th. He replaces Laxman Narziman, who is stepping down effective immediately. Starbucks Chief Financial Officer Rachel Ruggieri will serve as interim CEO until Niccol takes over. Narziman has been CEO of Starbucks for a little more than a year. Jody Lurie is a credit analyst at Bloomberg Intelligence.
Who knows what's on the table? All we know is that there might be a potential additional board member from Elliott Management. There might be all sorts of changes from that stable sort of cash-generating Starbucks that we know.
Jody Lurie with Bloomberg Intelligence, and you can hear more of that conversation on the Surveillance podcast. Download that wherever you get your podcasts. Meanwhile, Chipotle has appointed COO Scott Boatwright as interim CEO. Jack Hartung, who had announced his retirement effective next year, has agreed to remain with the organization indefinitely to ensure a smooth transition. Paramount Global began laying off staff this morning after the entertainment company said last week it planned to slash 15% of its U.S.-based workforce, or about 2,000 positions. In an internal memo viewed by Bloomberg, the company's 3 co-chief executive officers told staff those job cuts will take place in 3 phases and continue throughout the rest of the year. Paramount shares are down 0.6%. And we check the markets for you all day long here at Bloomberg. The S&P 500 is up 1% or 59 points. NASDAQ is up 1.7% or 292 points. And the Dow is up 0.6%. That's 238 points. The 10-year Treasury yield at 3.85% and the 2-year yield at 3.95%. NYMEX crude oil now down 2% or $1.62, trading at $78.43 a barrel. And that's a Bloomberg Business Flash.
Amy Morris, we thank you. Welcome to the Tuesday edition of Balance of Power. We're back in Washington live on Bloomberg Radio, on the satellite radio, and on YouTube, where you can always find us. Search Bloomberg Business News Live, who will meet you here in the studio. Our live stream awaits you. Of course, you can subscribe to the podcast and hear the best of our interviews every day here on the program. Just, do your podcast thing, Apple, Spotify, you figure that out. Nice to see the markets up, and thanks to Amy for covering the markets for us today as investors key off the economic data that we're going to discuss in a minute with Molly Smith. Of course, the economy is everything right now in this presidential race. When we talk about the markets and the economy, you can't have one conversation without the other. And we do have breaking news from ABC News. The big question was when and how many details when it comes to Kamala Harris's economic policy proposals, the platform. When do we get the plan? She said it would be this week. Now we can tell you it will be Friday. An economic policy speech in Raleigh, North Carolina. The campaign just out with this. Her first major policy rollout since jumping into the race will detail her plan to, quote, this is from the campaign now, lower costs for middle-class families, that sounds familiar, and take on corporate price gouging. So the big question we're going to have is, what's the difference between, I think, what were we doing, Kamalanomics, as opposed to Bidenomics? What's the difference? Is there a difference? By the end of this week, we might start getting answers as we roll into the Chicago convention next week. Now, you survived the whole Elon thing last night. We're going to talk about that coming up, but I want to get into the PPI data today because it's important. And we're on the eve of CPI data, the whole market keying off this stuff right now, and whether we're going to get a rate cut in September. Prices, these are wholesale prices, up in July by less than forecast. What does that mean about the consumer? Because now we're starting to see the margins get squeezed. And Molly's with us from an undisclosed location, Bloomberg economics editor, of course, cranking out the material at 8:30 every morning. Molly, it's great to see you. Welcome back. Morning. I know we're looking at wholesale pricing, but what are we learning about the consumer while we're at it?
So that's why exactly we like to look at the producer price index, because oftentimes wholesale prices can then feed through to the consumer in the coming months. It's not immediate, but it often is a predictor of what can happen for when, you and I and other Americans are paying for goods and services. So to see that it rose by less than forecast, certainly positive from a headline perspective. And to what you were just talking about in Kamalanomics, if that's what we're going to go with, if that's,
good job.
I think I got it. Yeah. If that's how if a big point of that has been focusing on price gouging, you certainly did not see that in the PPI report, because in fact, a lot of it was showing margins were lower at wholesalers and retailers, as in not price gouging, as in not charging consumers more than what maybe an input cost would suggest. So they're not taking big profits on consumers. So there was a little bit of a wrench into that argument for sure.
Okay. With the idea of a cut as soon as next month, the categories in the PPI, you write, that are used to calculate the PCE, which the Fed is looking at here, personal consumption expenditures price index, were generally tame. So all arrows are pointing in the same direction here, right, when it comes to the Fed?
Yeah, that's definitely what they're going to be looking at, all those categories in the PPI that feed through to the PCE. And just to throw in another set of another acronym there, the CPI that's coming out tomorrow, that's also hugely important for calculating the PCE, which comes out later this month. Generally, yes, the trend of disinflation is still broadly holding, even if the CPI tomorrow might show a bit of a pickup from June. But when you're looking at all of these categories as a whole and the broader trend of inflation, it is still generally moving lower.
Does this give you a sense of what CPI will tell us? Do we have a sense of what we're going to learn tomorrow?
Not based on just the PPI today. Like I said, the trends in the PPI can filter through to consumers in several months. It wouldn't be within the same month. But the one thing that was pretty concerning from a consumer perspective in the PPI report was seeing higher energy and food prices. And that would certainly be, a big disruption from the trend of what we've been seeing at the consumer level.
Got it. Molly, it's great to have you back. Thanks for joining, as always. Molly Smith, Bloomberg Economics editor, who puts the final touches on the econ stories that you read on the terminal and online. And we'll be talking a lot more about CPI tomorrow. This is something that could time out quite well for Kamala-nomics. I think we're going with that, right? I mentioned Kamala Harris, Raleigh, North Carolina, rolls out the big econ plan on Friday. We just learned as well Donald Trump will roll out his economic plan in Asheville, North Carolina. That'll be the 14th of August. That's the day Tim Walz accepts his nomination, at least, well, the coronation. He's already accepted it in Chicago at the convention. So a little counter-programming there. We're learning more about the schedule at the convention that we'll talk about later this hour as we all recover from the big interview on X last night. I was a captive audience. I'm just going to bring you in on this really quickly. I was with Kaylee Lyons. We were on our way back down from New York. We're on the train. I had nowhere to run and endured 3 hours of this. And when I say 3, they only talked for 2 because it took a really long time for this to start. I don't know if you were part of this. Everybody's clicking on the phone and you get the monkey with the hands because we couldn't connect. Turned out to be some kind of a cyber attack, according to Elon Musk. Finally, we heard his voice after 40 minutes of waiting. Here you go.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
Or did they just not have enough servers? I don't know. That's why we bring in Max. The distributed denial of service attack, yet we still are standing. Max Chafkin is our Elon whisperer. He's the co-host of Bloomberg's Elon Inc. podcast. And Max, you're the first guy I asked for this morning. Is there any way Max can come on and join us here? Because I can't imagine what you thought watching and listening to this. Thank you for joining.
I was also a captive audience.
World of politics here. Well, yeah, all right. So I want your version of this, first of all. Did Elon Musk not have the servers to handle it, or was it really a cyber attack from some hacker, as he was suggesting?
I don't think we know the answer to that question yet. There was some reporting going on at the same time, suggesting that Twitter employees or ex-employees were doubtful that this was true. We've seen during other events, the company's servers have just been overwhelmed, as you suggested. So it's hard to know. I mean, there was a fairly large audience, at least by the standards of Twitter. There are about over 1 million people listening concurrently during this live stream, which not a huge audience by like cable news, even cable news standards, or broadcast news, certainly not, but a big audience for X for sure.
Oh, well, he's not going to like that because X claims a total audience of more than 16 million. I was looking at that number the whole time, Max. I saw it top out at 1.3. I was one of them. I saw my face up there next to the speaker. And we just got a statement from Donald Trump, or at least a truth. What, is he not on X anymore? I thought so. That was maybe a one-day thing. Donald Trump writes, I spent 2.5 hours last night talking to Elon, his first name, a fantastic guy getting all-time record views hits. And all the fake news wants to report is the servers crashed because of the tremendous volume, he writes. And the show opened a little late. It was 40 minutes late. What they should be reporting, he says, Max, is the incredible number of people that were listening. I absolutely hate the fake news media. So bad for our country. So is this the new crowd size? The audience size on Spaces?
I mean, we should say that X, formerly known as Twitter, has another metric, which Elon Musk referenced this morning, which is like number of people who have seen posts about this event. And that's a very expansive audience. So that's viewers, that's people who are talking about, it's people who are seeing the thing that we're talking about. And that number, according to Elon Musk, is 1 billion. Now, media companies do this all the time, right? They come up with, they have metrics, and then they come up with expanded metrics because it's helpful when convincing advertisers. It's a good idea to be a part of it. So take those numbers with a grain of salt. I do think for Trump, he's getting access to really two things. Like, one is Elon Musk's audience. It's not huge. It's not Fox News huge, at any given moment, but it is substantial, and it is potentially a group of voters and donors that Trump doesn't otherwise have regular access to, and they really care about what Elon Musk says. The second thing, of course, is money. Elon Musk is a very rich man and now a significant political donor.
Yes, indeed. And might end up working for a Trump administration based on what we heard last night. I don't know if this was planned or just kind of an off the top of the head type of remark, but listen to Elon Musk pitching this idea for a role in a Trump administration.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love
if it were formed.
Well, you're the greatest cutter.
Yeah, that exchange.
The greatest cutter. So the UAW is keying off of that now. They think he's intimidating workers online. But so let's just take this one thing at a time. Max, what's Elon Musk doing here? He doesn't really want to work for a Trump admin, does he?
You would think not. I mean, he does already have something like 6 full-time jobs between all his companies. That said, I think what he's doing is, people think of Elon Musk as a great entrepreneur, a great technologist, but he definitely depends on a relationship with the U.S. government. The U.S. government is the major customer for SpaceX, his rocket company, big constituent even in the electric vehicle industry with subsidies for on the sale price and so on. So a friendly administration in the White House would be helpful to him. And then the other thing is he has this social network, which has kind of been flailing, struggling to increase revenue. Trump is when he's on there, a very active and engaging Twitter user. So the second thing is getting a major influencer onto his social media platform.
Flailing. Man, Max, someday I want to see your notifications and I want to see what your inbox looks like, because I bet it's the Wild West. Am I right?
I mean, the revenue is way down. I mean, I think Musk, of course, has disputed that and would gladly challenge anyone who says such things to a cage match.
You cover Elon Musk for a living. Every time you say something, you're going to hear about it on Twitter. You're going to get a note in your inbox from either a Tesla shareholder or an Elon fan, and now you add the layer of politics on it. So tell me about that. To what extent does Elon Musk want to be involved in the political discourse, knowing that he's promoting Republican ideas here? He wants to be, or apparently is, friends with Donald Trump. Will he lean into this more in the fall?
Well, I mean, he's always been politically engaged for some of the reasons I mentioned. He, as he talked about during this broadcast, he was friendly with Obama. He's sort of shifted to suit the times. What's different now, and you're kind of hinting at it, is by allying himself with the Trump movement, you're in this kind of hyper-polarized, hyper-partisan environment where you potentially could bring along some people who are going to feel passionately, some maybe passionate affiliation with Elon Musk. On the other hand, potentially turning off some electric car buyers, many of whom are progressives.
You kind of wonder if the way Donald Trump was talking last night and having heard the pitch from Elon Musk, if the Trump White House embraces this somehow, because the narrative has been Elon Musk felt burned. He felt jilted by the Biden administration bringing in GM and Ford and everybody but Tesla to celebrate this idea of the EV, which is what I meant to say a second ago, and promote incentives around it. Are we going to find ourselves, if Donald Trump is in fact elected, with an administration that has EV incentives, tax breaks that would be more associated with the Democratic Party?
Well, Trump has signaled that no, that's not the case. On the stump, and even during this event, he said we don't need everyone to own an EV. Expressed skepticism both about EVs and about the possibility of man-made climate change. So I don't think you should expect sort of Democrat-style electric vehicle policy. But, you know, at this point, Tesla is a market leader. Tesla has a lot of the market. So these subsidies arguably are helping Tesla's competitors more than helping Tesla. And there are lots of other ways that Donald Trump could help Elon Musk. You know, the Republican platform includes mention of a Mars mission. That would be a big deal for SpaceX. You could imagine also regulatory changes that could really help Tesla as it seeks to roll out these proposed robo-taxis.
Seems to me you can't also just undermine the fact that they just want to be on the phone together. He wants to be able to call the president if he gets elected. The president wants to hear from the richest guy in the world, Elon Musk. Max, it's great to have you. Thank you for joining. I'm really glad you could do it. Co-host of Bloomberg's Elon Inc. podcast. Find it on Apple, Spotify, and, you know, wherever you do your podcasts. Our Elon whisperer, Max Chafkin, as we drive into this day after the Elon Musk interview with Donald Trump on X. Nathan Dean is going to join us next to look at the other ticket coming up on what a Tim Walz VP pick would mean for regulations. It's next on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Starbucks struggling with weak demand and disgruntled investors, says CEO Laxman Narzaman is stepping down after a little more than a year in that job. And Brian Niccol, the chairman and CEO of Chipotle, will now become Starbucks chairman and CEO effective September 9th. Starbucks shares now 20% higher. Chipotle shares down 9.2%. U.S. wholesale inflation cooled in July, and another sign that price pressures are starting to ease. The Labor Department reported its producer price index rose 0.1% from June to July and 2.2% from a year earlier. That's reinforced speculation that the Fed can cut rates as soon as September, and that's pushed stocks higher and bonds lower. We check markets for you all day long here at Bloomberg. S&P 500 up 1% or 71 points. NASDAQ up 2% or 334 points. And the Dow is up 0.8%. That's about 346 points. The 10-year Treasury yield at 3.86% and the 2-year yield at 3.95%. NYMEX crude oil is down almost 2% at 1.9%. That's about $1.57 or $78.49 a barrel. COMEX gold is up 0.2% or $5, now trading at $25.09 per ounce. That's a Bloomberg Business Flash.
All right, this is Balance of Power on Bloomberg Radio, on the satellite and on YouTube. I'm Joe Matthew in Washington. Thanks for being with us here on the fastest show in politics as we recover from the 2-hour tour that was Elon Musk's interview with Donald Trump, sponsored by the Trump campaign. By the way, if you were actually on X last night, you saw ads running across the spaces, wondering how this is all framed in the campaign framing here, whether that was in fact a sponsored event. It was basically a 2-hour live ad, a political ad, or was that an in-kind contribution from Elon Musk? Probably won't get the answers to those questions today, but I am curious to know about this evolution that Donald Trump might be going through with Elon Musk, and that's where we start our conversation with Nathan Dean. We have a lot to talk about with our friend from Bloomberg Intelligence, where he is senior U.S. policy analyst. Great to see you, sir. Welcome back. Before we get into what Tim Walz is up to today, it's an important part of the whole story. You were listening to this interview last night, 2 hours long, talked about EVs, among other things. Once it got started, does Donald Trump take something away here in terms of policy? Are we going to see, we're just talking to Max about this, new incentives for EVs. Is he going to change his language when it comes to this idea, talking to UAW members, for instance?
So it's funny, this is actually one of the biggest questions we got this morning from clients is what's going to happen with the EV space. And what we're saying is, we think that the language about rolling back some of these EV tax credits, if you will dial down a little bit in terms of the campaign. Mm-hmm. But then come next year, it's certainly going to return, because next year, the Trump-era tax cuts expire for individuals at the end of 2025. And Congress, whether it's a Kamala Harris-led Washington or a President Trump-led Washington, is going to have to figure out how to pay for, some of these changes. And the tax debate will create this EV calculus, if you will. Now, I think there is a serious risk that these tax credits of $7,500 are going to go away. The reason being is that, from Tesla's point of view, it's not the worst thing in the world if the tax credit goes away for other car companies like Ford and GM, who are certainly a little bit behind on the market share game. Also think of the Chinese input here. China has been talking about trying to put a lot more low-cost EV cars into the U.S. market. Yeah. And this tax credit, sort of keeps it at the wealthy level, and also sort of hastens sort of the Chinese adoption, if you will. So there could be some anti-China rhetoric into this space. So certainly something to keep in mind.
He wants to kill, if Donald Trump is elected again, he wants to kill the IRA, correct? That is something that would argue potentially with some of this, right? How would you get all of this done? Would he actually be implementing new incentives?
So I think let's start with his statement of, let's just say, I want to kill the IRA. Yeah. I think he's saying that right now, and he certainly believes it. But then when you get into next year, let's look at the makeup of Congress. If he has the House and the Senate, he can use reconciliation to kill the IRA. But will he do that? Probably not. It would be more of cuts than, scalpel rather than a sledgehammer type of thing. The reason being is that there are a lot of GOP-led states right now that are getting incentives. In fact, for solar, for example, is doing a lot of plants in Georgia and Louisiana, for example. So I think you could see a lot of local politicians, and even Bloomberg News did some reporting on this a couple of days ago. Some of these local politicians may come up to Washington and say, look, it's great for you guys to say that you're going to kill the IRA on the campaign trail. Sure. But I got a I got a company plant being built here in Georgia right now.
Yeah.
Don't stop me on this. And so I think, and it also just depends on if the Republicans win, they need to win big, because I don't think they're going to be able to do it on a slow margin or smaller.
Not so easy to unwind in this climate. Donald Trump's been talking to UAW members, though, who like what they're hearing, including when it comes to EVs. He's suggesting that they've been painted into a corner by the companies they work for here, GM, Ford, and others turning away from ICE vehicles. How do you have both if you're going to be endorsed by Elon Musk, of course, non-union, and try to drive this message forward?
You know, this is the question I think every analyst and every portfolio manager in their space is trying to figure out at the moment. And one of the comments that President Trump said is he's not against EVs, but he is okay with a small segment of the market being EVs. Now,
It's the mandates he says he doesn't like.
Correct. But, you know, Elon Musk is also, through Tesla, has actually, you know, lobbied for that EPA mandate, if you will. So this is where things get a little bit complex. So let's take President Trump's statements at a high level, and then let's figure out how is he going to implement that if he becomes president. So first step is he going to nominate regulatory leadership in place that will do away with that mandate? On the EPA side, probably he will. You know, when it comes to the tax side, that's a legislative change. Really depends on the makeup of the House. So the regulatory, you know, essentially what you have to do is figure out, is this issue that President Trump wants to tackle a regulatory issue or a legislative issue? If it's regulatory, the odds, according to our matrix, go a little bit higher, 60, 70%. On the legislative side, I think 30 to 40%.
This is turning into a fun game with Nathan Dean. Enter the new running mate on the Democratic side, Tim Walz. A lot of unknowns about this entire ticket because we haven't seen a lot of policy proposals. We don't have details. We haven't been able to pick through interviews because there haven't been any yet. And a lot of folks are playing the guessing game on what a Tim Walz addition might mean when it comes, for instance, to regulations based on his experience as the governor of Minnesota. Does the running mate have any impact on any of this?
Well, you know, I think in 2024, the running mate always has an impact. But we should start with the caveat that this would only apply if Kamala Harris is president, would then defer policy to Tim Walz. But our working assumption, if you will, when it comes to Vice President Kamala Harris and obviously Governor Tim Walz, is that it's going to be progressive in certain areas, moderate in others. So if you look at their records, progressive on consumer issues, individual issues, things like reproductive rights and so forth, you know, but then look for a little bit more moderate issues on things that the more, portfolio manager thinks of. Governor Walz put in a $1.9 billion infrastructure plan. I'm not saying that, you know, they're going to do another infrastructure deal next year, but that's something that if you're in construction companies, you like hearing. I think also on the regulation side, just picking on Basel III Endgame, for example, this big bank capital rule, you know, the Biden-era regulators proposed it, came out to be a 19% increase in capital requirements. I would look for our Kamala Harris regulator to actually finalize it somewhere around 5 to 7% in terms. So it's the same idea, just dialed it a little bit back so that A, business sector is probably a little bit okay with it, and B, you're not going to run into many court issues with the Fifth Circuit and the Supreme Court, for example.
So when the phone's ringing and they're can I stick with Caterpillar and JP Morgan in a Kamala Harris administration, it sounds like there might be reason to. This idea that Democrats pose more of a challenge to the stock market than Republicans is being challenged right now.
Well, we obviously won't say that there's going to be a new infrastructure plan, but there will be a protection of both the IIJA, the CHIPS Act, and the IRA. Those big investments that have 5, 6, 7 year lifespans. Remember, the general contracting process, it takes about 2 years to go from the president's signature into the sector or into the companies that are actually paying, getting the benefits of this. Those protections for years 3, 4, 5, 6, and 7 can go into your models. And you can have a little bit more certainty.
This is all really important considering the amount of uncertainty out there. We're going to get the big economy speech, it looks like, in Raleigh on Friday. So this will set the stage for the convention in Chicago. How far do you think Kamala Harris will go in delivering details that so many people have been asking for here?
I don't think it's going to be very heavy on the details. I think what she's going to try and do is make a connection to the American individual, because one of the things, like, let's just pick on I was at the grocery store yesterday. Price of chicken was a lot more than what I remember paying 4 years ago. So I think Kamala Harris in that speech is going to say, look, I'm going to implement an economy that will bring prices down. It could be very similar to the Biden economic theory that has been going on right now.
That's the question.
But he's just going to take the name Biden off of it.
So it's Kamalanomics, but it's kind of the same thing, because people are asking whether it's the border or the economy. You're in the building right now. What do you mean you're going to bring prices lower? I thought that's what you guys were working on already.
But this campaign, she's done it on the quick. She's only got 3 months to essentially run. And so I think, from the campaign perspective, they really probably don't even have policies that they've vetted, worked over time and so forth. So I think they're trying to figure this out as they go. So I anticipate this speech to be a little bit high on, a little bit lower on details, if you will, more directional.
More kitchen table. It sounds like a Joe Biden speech, I have to admit. I mean, how much can they really promise next week in Chicago with specifics to get to prices? Because, by the way, Donald Trump has not issued a plan on how to lower prices other than drill, baby, drill.
Well, anytime you say specifics, my odds of finalization
go way
lower.
down. All right.
So,
good.
Anytime you get into specifics, it's just, that's the point where bills go to die.
How true.
So start with ideas. Start with high-level ideas. I think that's what Kamala Harris will say next week. Look, President Trump in the RNC agenda, remember, 10 years ago, these RNC agendas were hundreds of pages long.
That's right, yeah.
And now
we got
like
10 bullets.
10 bullets. So I think something could be similar could play out on the Democratic side as well. They didn't have the time to put together this agenda that she could sign off and say, this is mine. So I think you're going to get something like 10, 15 bullets, maybe a couple pages, and then go from there.
But she still has the risks of incumbency here, right? Or the weight of incumbency. It's not like you've been an outsider the last 3 years. You've been working with and presumably advising Joe Biden on your thoughts on how to bring prices lower. So how do you tell people with a straight face you're going to really do it now?
Well, it really depends. It's kind
totally
of
unfair question to you.
No, but it's totally ironic because, she's running as a change candidate.
Yes,
and she's
right.
the one that's in the White House.
The call's coming from inside the House.
But, I think what she'll say is that, that times have changed. A politician, as you know all too well, can spin any question that asks and say, this is how it's going to work out for me. But I think the American people, at least those that are supportive of the Democratic side, want to see Kamala Harris put a little bit more specifics behind her, because right now it's a non-Biden vote that I think a lot of Democrats are looking for, and they want to change that from a non-Biden vote to a Kamala Harris vote. Because the the non-Biden vote doesn't get you, people aren't going to be coming out and driving in droves and so forth if they think that they're just voting for non-Biden.
Yes, correct. Well, it's interesting. We're going to be hearing about an uncommitted vote next week, and some uncommitted delegates. I'll be curious to see what form that takes. In our remaining moment with our friend Nathan Dean, whose hometown is Chicago, is the city ready for this next week?
Chicago's always ready.
Yeah?
I mean, and if you're going to Chicago, Pequod's, Lou Malnati's pizza, good stuff. But look, the city of Chicago...
There'll be no one at Lou Malnati's next week, right?
No,
just...
but, the city of Chicago has had this before. Obviously, it was in the late 90s when they had this before. But, I think the convention is going to dial... The intensity of the convention is going to be a lot much less... turmoil, if you will, now that President Biden has made this decision to step aside. There's a lot of unity in the party right now, and so there could be a lot of issues, but I think Chicago's got it.
Kingston Mines for Blues? Where do I go out at night?
I'll send you some stuff.
Okay. I want Nathan Dean's Chicago. Don't you want Nathan Dean's Chicago? Come with us. We'd have a blast. Of course, analyzing U.S. policy for Bloomberg Intelligence, our friend Nathan Dean. I'm Joe Matthew. We'll assemble the panel next on Bloomberg.
It's 12:40 on Wall Street. I'm Amy Morris. Stocks are higher after Wall Street started the new week with signs of market indecision. PPI data showed cooling inflation, a signal that the Fed could lower interest rates as soon as September. And we check markets for you all day long here at Bloomberg. The S&P 500 up 1.3% or 69 points. NASDAQ up almost 2% or 331 points. And the Dow is up 0.7% or 302 points. The 10-year Treasury yield at 3.85% and the 2-year yield at 3.94%. NYMEX crude oil down 1.8% or $1.49, now trading at $78.57 a barrel. And COMEX gold is up 0.1% or $2.80, now trading at $25.06.8 per ounce. Starbucks says CEO Laxman Narasimhan is stepping down after a little more than a year in the job. The chairman and CEO of Chipotle, Brian Niccol, will become Starbucks chairman and CEO on September 9th. Starbucks shares jumped more than 13% before the market opened. Right now, shares are 21% higher. Chipotle shares now down 9%. High interest rates and inflation have consumers holding off buying homes or pursuing renovations that might typically need financing, and now Home Depot is feeling that. The retailer lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in the coming months. The retailer says it now sees comparable sales falling 3 to 4% for the year, below average analyst estimates compiled by Bloomberg. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thanks. Great to have Amy Morris with us and her eyes on the markets as we continue our political conversation here on Balance of Power on Bloomberg Radio, on the satellite radio, and on YouTube, where you can search Bloomberg Business News Live. Find us. Our live stream awaits you with news from the campaign trail today and from Chicago. We were just talking to Nathan Dean about what's going to take place next week at the DNC, and we do have news on the lineup this morning. Pretty interesting to think about the way this is all going to work, knowing, of course, Tim Walz will be speaking on Wednesday night, and Kamala Harris will speak on Thursday. We're filling in the blanks. Joe Biden is going to open this thing on Monday. We've talked about that with Rick and Jeannie already. They're kind of ripping off the Band-Aid, check the box, get Joe Biden done Monday night so we can look to the future. Former Secretary of State Hillary Clinton, it turns out, is also being held on Monday night. Gets more interesting from there. Tuesday, Barack Obama. It is his hometown, after all. And a big part of the reason why Joe Biden is not in this race anymore. Then it's Bill Clinton. Isn't this interesting? On Wednesday night, introducing Tim Walz, not Hillary Clinton. They're going to the former president for this one, presumably for some kind of a folksy presentation. And this is where we start with our panel today. They're both back with us. Bloomberg Politics contributor Jeannie Shanzano, political science professor, Iona University, and senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick Davis, partner Stone Court Capital, of course, and longtime Republican strategist. What do you make of the lineup here, Jeannie? I know I'm probably reading into all this stuff, but you get Hillary and Joe Biden out of the way on Monday night so you can feature Bill Clinton on what will be a very well-watched night on Wednesday with the vice president. Why these decisions?
I do think it makes sense. You know, obviously, both Joe Biden and Hillary Clinton have run, and of course, he won. She did not. They served together in Obama's administration. So I do think that makes sense. And then to your point, you have Barack Obama, a great speaker, and it's his hometown, and still widely beloved. I'm curious to see if we hear anything from Michelle Obama. Haven't heard her name yet. And Bill Clinton, he's known as one of the people who really does a great job introducing somebody like Waltz. I keep wondering, does he pull out the old saxophone? Who knows what happens? But they do have a similar sort of background in terms of being from, you know, the Midwest and, you know, having served as governors and that kind of thing. So I do think that makes sense. And then, of course, the question becomes, who introduces Kamala Harris? I am curious to see as well. I don't think we know that yet.
No, we don't. And Rick, you've run a convention. So talk to me about the process that goes into decisions like these when you're figuring out the speaking schedule and how to best capture the media coverage that'll come with it.
Yeah, you can imagine the monkey wrench that was thrown into this 3 weeks ago when the top of the ticket flipped and all the focus, all the agenda was built around showcasing Joe Biden's accomplishments as president and his vision for the next presidency. And that includes the kinds of people who are speaking, the stories of Joe Biden's, growing up and, his sort of, middle-class roots and, working hard for the working man. And now all that has been turned upside down. So there's a lot of rewriting that's going on and a lot of new recruitment of new faces. And as you've described, these are the standards, right? When you've got former presidents and former nominees aplenty who are willing actually to come to the convention, unlike the Republican convention where George W. Bush wasn't willing to be anywhere near that zip code when Donald Trump was doing his victory lap. You have ready and willing participants. And so how do you then juggle them around? And I do think that part of the Biden burden for the convention managers was talking about his legacy without sounding like he's been around forever, right? And playing to the age issue. Here, you don't have that problem. It's all going to be new, almost as if Harris wasn't even part of the Biden administration. We'll get credit for that to Joe Biden and all the accomplishments, and then she'll peel off and say, and then for the future, here's my act. And that's where the new economic policy comes in. That's where the new optics come in with my new vice president, Walz. And so I think that will be the handoff, that Bill Clinton gives to Walz, and then they peel into it, on Wednesday and Thursday night.
Jeannie, Bill Clinton is 77 years old. He's 1 year younger than Donald Trump. This is who has been chosen now to introduce Tim Walz on Wednesday night. This is an individual who was almost canceled. I don't think that's possible with a former president. Certainly Donald Trump has proven that. But was not seen as a helping hand to the Democratic Party during the Me Too movement. It looked like he was being moved to the sidelines here. Are you surprised to see him with such a prominent role in 2024?
I'm not. He is a former president who is living healthy, able to speak. To your point, obviously, there is a lot there, and we saw that in the Me Too movement, rightly so. And I think that may be one of the many reasons why you don't see him on a Thursday night introducing Kamala Harris. But again, he is proven to be over several decades really, really good at getting out there, speaking to Democrats, particularly the kind of Democrats that Kamala Harris and Tim Walz want to appeal to, which are from the Midwest, from these Rust Belt states. I mean, after all, that's how Bill Clinton made his name, as a very, very moderate Democrat who went out there and showed that the Democrats were not so liberal that they should, just be washed away in an election that he ended up winning. So, he does have that appeal. Certainly, obviously, it comes with downsides. And I think, in my mind, one of the big questions is, what do they do in terms of a direction on the Thursday night for Kamala Harris? I think there's a lot of really, really attractive possibilities. I'm going to put my vote in for Michelle Obama and Beyonce, Charlie as well, but there's a lot of others. But I do think it showcases that difference from that Wednesday to Thursday night in terms of generation.
Big time. It's a big turning of the page here, unless, of course, the uncommitteds cause a problem, Rick. I don't think they'll disrupt the whole flow here, but it could be part of the story. They're calling them ceasefire delegates. Up in Boston this morning, Rick, according to Politico, there are about 30 uncommitted delegates representing the Democratic primary voters who opposed Joe Biden. This, of course, brings us to the matter of Israel and the many uncommitted votes that we saw in some of the swing states during the primaries that we talked about. Rick, if you were running this convention, as you have done in your career, what would you be doing right now to try to meet with these people, to try to diffuse the situation before everybody shows up in Chicago?
Yeah, I mean, we talked about this the other day, Joe, and I suggested that, you'd want to put a group together that would start literally hand-holding these folks, trying to resolve issues and, find things of interest that they have in the platform and other options, future administration points of view. and also, work them over hard on the fact that, Donald Trump's not their kind of person. They shouldn't do anything to enhance his appeal. And then I would make sure that I surrounded them with my best political operatives when they're inside the convention, so that at least I got a heads up. But for sure, I mean, most of them are in Michigan delegation, and that Michigan delegation would probably be sitting in the rafters, where there would be literally no ability for a camera crew to take a picture of them.
All right, now we're getting warmer, Jeannie. How do you think Kamala Harris and her campaign handled this? We talked yesterday about the potential for thousands of protesters outside. What about the couple of dozen inside?
Yeah, and those couple of dozen are arguably even more potentially problematic for the DNC and the Democrats than the thousands outside. In addition to Michigan, we've also got some from Minnesota, and that creates a dilemma in terms of what Rick's talking about. I don't know if you can put the Minnesota delegates in the rafters because they have a vice presidential nominee there. And so that, I think, is where the issue is. But I do think the Democrats are exercising good risk management here. They have, been meeting with these folks. They've been talking to them. They have a list of demands. Certainly some of them they're never going to meet. But if they can start to meet these people halfway, or a quarter of the way, if you will, they may be able to get them to hold off on doing anything which shows dissension and does what none of them want, which is showing support for Donald Trump. So I do think this is the way to proceed. But of course, this is going to be one of the big things that the media are watching for the entire week.
To what extent should Democrats be leveraging celebrity in this convention, Rick? You just heard Jeannie mention Beyonce. That's the caliber we could be talking about here. Everything we hear coming out of the DNC is big surprises, lots of entertainment. We've seen a lot of musicians and entertainers showing up for Kamala Harris on the campaign trail. Is there a point of diminishing returns for Democrats on this?
Yeah, I think so. I mean, voters are going to look in and they want to see something that they can vote on, right? And it's not an up or down vote on Beyonce and her latest outfit. That stuff is entertaining to the delegates. It's entertaining to the media. We'll have a blast watching and listening to it when we're there. Yeah. Most of it does not get broadcast on network television or on cable. So it's the kind of thing that has a diminishing return. But at the end of the day, Donald Trump brought the World Wrestling Championship types to his convention. You can expect Hollywood to show up at the Democratic convention and, pick your poison.
One of the highlights of Milwaukee for me was the split screen with Rick, Jeannie, and Kid Rock as part of our live coverage. Jeannie, how do you counter Kid Rock? That's Beyonce then. You just said it, right?
It could be Beyonce. It could be Charlie X. What is it, Joe? CSXXCX. You correct
Whatever
me, Joe.
You say. Sure.
Well, one thing we do know is they have a really, really at the Democratic side well-developed streaming output that's going to go out. They have been targeting Gen Z like no tomorrow. And also we're hearing that they are moving away, as the Republicans did, from A-list celebrities to more targeted folks. So, people who can really target those groups that they want to get out. So, as much as we all love Beyonce, she may just be too A-list, this kind of voter targeting activity. So it's a really fascinating way in which they're doing it. Yeah, she's too mainstream, Joe. Listen, Donald Trump wants gamers, the Democrats want somebody else. So I think we're going to see some targeted names that have, can really move the needle with this group. And Joe, the vibe, very, very important this year. So happy, good vibes is what they're going for.
Yeah, I know how brat you are, Jeannie. An XCX from producer James. They're listening to Brat in the control room right now, making fun of us. Rick, you're saved by the bell. I'm not going to ask you about any of the performers in Chicago. That's a no comment from Rick Davis. Great panel. Thank you both. It's quite all right. They're going to be back with us in our second hour. The best panel in the business, Rick Davis and Jeannie Shanzano, here on Balance of Power on Bloomberg Radio. We'll invite our global television audience to our little talk here coming up. Aren't we lucky we get to do this every day? in the midst of one of the most historic presidential campaign cycles of our lives. Coming up next hour, Kaylee's back from New York, too. She'll be here with us on Balance of Power, and a conversation coming up with Michael Allen from Beacon Global Strategies. And the news that we haven't even had a chance to touch yet from Israel today and from Ukraine. We've got a lot cooking. You want to stay with us here on Bloomberg.
world of politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Is this the eve of a new war or a ceasefire? Welcome to the fastest show in politics as Israel awaits a retaliatory strike from Iran, even as the U.S. works for a ceasefire between Israel, I should say, and Hamas. I'm Joe Matthew alongside Kaylee Lyons in Washington. We're back in the Capitol today. Kaylee, it has been 2 weeks since the former leader of Hamas was killed in Tehran, and we still don't know what the next leg in this story is.
No, we do know that both Israel and the U.S. are braced for some kind of retaliation, but we've been braced since this happened, Joe, and nothing yet has come to fruition. And of course, it's Antony Blinken's heading to the Middle East. There are still efforts underway to reach a ceasefire deal, as you mentioned. And it's unclear how both of these things can happen at the same time. An Iranian proxy in Israel coming to an agreement at the same time that Iran itself and potentially other proxies could be ready to strike Israel directly.
All the while, we're seeing remarkable progress by Ukraine against Russia in this cross-border incursion. Kaylee, we're going to put this all together in an important conversation with Michael Allen from Beacon Global Strategies. He'll be with us coming up soon at the table.
Yeah, and we'll also be joined by Bloomberg's Stephanie Lai, because we still got to do the debrief of that more than 2-hour-long conversation that happened on X Spaces last night between Donald Trump and Elon Musk. We fought our way into the space. We listened to it in its entirety so that not everyone had to, and we'll have more details on that coming up in just a few minutes. First, though, as always, we start with a check on the markets, and Amy Morris has that for us from here in Washington today. Hey, Amy.
Hi, Kaylee. Starbucks was struggling with weak demand and disgruntled investors, and says now CEO Laxman Narasimhan is stepping down after a little more than a year in the job. The Seattle coffee giant says Brian Niccol, the chairman and CEO of Chipotle, will become Starbucks chairman and CEO September 9th. Starbucks shares jumped more than 13% before the market opened. Starbucks shares now up 21%. Narasimhan is a longtime PepsiCo executive, became Starbucks CEO in March of last year, and succeeded Howard Schultz, the longtime Starbucks leader and chairman emeritus who came out of retirement in 2022 to serve as the company's interim CEO. Niccol's been CEO of Chipotle since 2018. Home Depot lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in coming months. The retailer now says it sees comparable sales falling 3 to 4% for the year versus the previous expectation for a 1% decline across all 9 sales in stores open at least a year. That was below the average analyst estimate compiled by Bloomberg. Treasuries advanced after a weaker than expected U.S. producer prices report bolstered the case for the Fed to cut borrowing costs more aggressively. We check markets for you all day long here at Bloomberg. The S&P is up 80 points, NASDAQ up 383 points, the Dow is up 332 points, the 10-year Treasury yield at 3.85%, and the 2-year yield at 3.95%. And that's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines alongside Joe Matthew right here on Bloomberg TV and radio, where you can find us every day at this time without fail. We always will start at 1 p.m. Eastern time.
I know where you're going.
Wasn't necessarily the case with the promised 8 p.m. start last night of the X space between Elon Musk and Donald Trump. Started a little bit behind schedule, and we're blaming technical difficulties, or if Elon Musk is to be believed, a denial of service attack.
Yeah, right. That's correct. It was 40 minutes late. Just to bring everyone in for 1 second, because we're always honest, it's just us here. Kaylee and I were on the train back from New York, so we were the captive audience. We had nothing left, nothing else to do. And you got in pretty quick. It took me about a half an hour.
Where no one else could. I couldn't tell if I was honored or
Well, I don't know. I felt like you had an invitation, but you got to listen to that great music for 40 minutes while I continued. Finally got in, and then we sat there for 2 hours listening to what sounded like a couple of guys talking on the phone.
Yeah. Oh, it was just and it was as promised, an unscripted conversation. Elon Musk said it would be, and that there were no limits to the subject matter. But frankly, the subject matter did stray often back to what we hear repeatedly from Donald Trump, who spoke a lot, and not all of it attacks aimed at his opponent, Kamala Harris.
You know, Stephanie Lai, it was her job to listen to it as well. She was listening, so you don't have to. Bloomberg White House and politics reporter with us now at the table. Stephanie, thank you for being here, as always. I'm sure you're still recovering from this whole episode as well. How do we refer to this? It was essentially a 2-hour live political advertisement. And the Trump campaign was actually running ads on it. It was sponsoring the space. So was this basically a Trump campaign ad buy?
I mean, we have to remember that this was a conversation. You know, I think at some points during the day before, some media outlets were naming it an interview with Elon Musk. Yeah. And that really wasn't the case. You know, it was very much Elon Musk giving his opinion on some topic and asking Trump, you know, how do you feel about this? Or, you know, is this what you think as well? And so, you know, this entire event felt like a rally, but just there was some, you know, some conversation between
Yeah, a digital one, perhaps. I have to say, when I was taking part in the space, I was one of the, what I saw at maximum, a 1.3 million that were tuned in at that time. But I know Donald Trump on it last night said something closer to 60 million.
Yeah.
X itself said the engagement levels beyond that were far higher. So I guess the question, Stephanie, is that all they were trying to achieve? To point out, as Donald Trump has been very concerned with the crowd size that Kamala Harris has been drawing in, that he has the ability to get that many people to listen to him on whatever Elon Musk and he decide to talk about?
Yeah, I mean, they were looking for some sort of splashy event to make headlines, to bring the attention back to the campaign, because the last 3 weeks, we've really seen the focus on Kamala Harris and Tim Walz. There's been so much momentum behind them, just given the fact that we're in this news cycle where we're figuring out what the Democratic ticket is going to look like, what the agenda is going to look like. And so this was really the moment for the Trump campaign to regain the narrative and to maybe make some news. But from what I was hearing...
Was news made?
There was no news made. It was very much just Trump rehashing what he said in the past, his past proposals. I think one thing that stuck out to me was that he mentioned that he was worried of nuclear warming, which was not a phrase that I'd heard before. But essentially the idea is, we have to be worried about our national security. A lot of countries have access to nuclear weapons. But that wasn't anything that I'd quite heard of, or that term specifically.
Different version on a refrain from Donald Trump. By the way, it was Elon Musk who I think first called it an interview, and then the Trump campaign called it, I think, the most important interview of all time as it was getting ready to get started. But so, picture us there. We're clacking down the tracks on this 40 minutes into this, and we've got the earbuds in, and then the music stops, and we hear this.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
There was a question about whether this invitation would be extended to Kamala Harris. Elon Musk has suggested as much. He referred to her as Kamala as opposed to President Trump in his tweet. Will the Harris campaign indulge such an invitation?
I've not seen any signals just yet, but, even last week when Trump was interviewed by a video gamer, Aiden Ross, he also extended an invitation to the Vice President Harris. And so it's not entirely clear if that's really the audience that they're looking for.
Does she get a Cybertruck, too, if she does it?
Maybe. We'll see, yeah.
That's the question. And a watch, right?
Yeah, there's a Rolex,
fancy watch. At that, it is worth noting that you obviously are on the campaign trail a lot. Donald Trump is going to be in North Carolina this week outlining his economic policy. We expect now that Kamala Harris will also be in North Carolina on Friday to outline hers. This is after we heard her float the idea of no taxes on tips, which Donald Trump had floated. J.D. Vance is talking about an expanded child tax credit, something that Democrats like Harris have long been in favor of. So when we get these economic policies fully outlined, are we going to come to find that there's actually not that much difference between them?
I mean, I think that's the most interesting thing about this election cycle so far. There's been so many areas where it actually seems like Democrats and Republicans agree. Even just looking at the last year, Democrats in the House and Senate decided to take up an immigration bill, right? And obviously it didn't go through, but just the fact that these issues are things that everyone is talking about and everyone cares about shows a lot more agreement than disagreement among the two parties.
Yeah, absolutely. Stephanie Lai, thank you so much, as always, covering politics for us here at Bloomberg. We appreciate it. And as Stephanie brings up that border agreement that obviously did not make it through Congress, Donald Trump also pointed out on the call last night that she seems to be trying to be Trump when it comes to stricter border measures. At least that was his suggestion. She, too, has started singing a different tune than she was when she ran for president the first time around in 2019.
We talked a little bit yesterday about some of the overlap on other issues. Expanded child tax credit promoted by J.D. Vance. No taxes on tips promoted by Kamala Harris. Maybe things get a little mushy on some of these issues. Then there's the matter, of course, of geopolitics, knowing that we could have a significant number of protesters and even uncommitted delegates at the Chicago convention next week. Kaylee, we're still waiting to find out what Iran will do to retaliate against Israel.
And this is actually something that came up on this X space between Donald Trump and Elon Musk last night. Here's what the former president had to say on this matter.
They're all waiting for an attack from Iran. Iran would not be attacking, believe me. When I was there, and I say it with respect, because I think we would have been good with Iran. I don't want to do anything bad to Iran, but they knew not to mess around.
So for more on what's happening in the Middle East, and I guess what would have happened if there were a different president in the office or not, Michael Allen is with us now. He is former special assistant to the president during the Bush administration, now managing director and partner at Beacon Global Strategies. Mike, always good to see you here in studio on Bloomberg TV and radio. Appreciate you joining us. So Donald Trump has said this about a number of hot geopolitical conflicts in the world, that Russia never would have gone into Ukraine, that what's happening in the Middle East October 7th wouldn't have happened. Obviously, they both happened now. I don't know if you really believe that to be true, but his suggestion that Iran wouldn't be going after Israel, considering the contentious nature of Israel's role in the Middle East that has been there pretty much perpetually.
Right.
Is this being intellectually honest?
It's hard to just throw out a counterfactual and make an assertion. There's no way to test it, of course. I think what he's trying to do is premise everything on what most people agree was a bad call from President Biden, and that was the way that he got out of Afghanistan. And the narrative starts there, which is that because of the way you did it, you were weak and perceived as weak, and therefore everybody moved against you. I think that's a fair criticism that people can make, but I mean, can we discern either way? These counterfactuals, it's too hard to do, but it's politics. We're in a presidential election year, and I understand people are going to make those arguments.
It's been almost 2 weeks. Tomorrow is 2 weeks since the killing of the political leader of Hamas in Tehran. What is Iran waiting for, or is this part of the retaliation, as has been suggested, the wait?
Yeah, I've seen a little bit about that. Maybe they're trying to do psychological mind games on the Israelis, but I don't really think so. I think it's one, like we've talked about, they need to land a punch this time. So they need to figure out the combination of cruise missiles and or ballistic missiles and drones, some of which need to get through. But the hard part, the other thing they need to balance is that they don't want to be extraordinarily successful, and they don't want to kill too many civilians, because then that might risk a total war with the Israelis. And I don't think the Iranians really want to get into a complete and total war. They benefit by having their proxies operate. And that leads to the sort of the second thing that they're weighing, which is Hezbollah is going to take some shots, but are they going to go at them in a total war type fashion? Or is it going to be just enough to make them look credible, to make them look strong, but not provoke a multi-week contest with the stronger Israelis?
Well, surely they're also weighing the fact that currently another proxy, Hamas and Israel and other mediators, are at least talking again when it comes to a ceasefire. I believe Hamas still hasn't firmly committed to joining those talks that have been suggested for Thursday. How do the ceasefire negotiations factor into this calculation? Can both of these things happen? Iran retaliates and a proxy finds some kind of deal with Israel?
I think you're onto something. I didn't think it made sense to put all these things and try and cram them together. I understand the Biden administration is trying to do all that they can to get a ceasefire, but more importantly, to get these hostages home, especially since at least 5 of them are Americans. But I didn't think it just sort of suited what was on the international agenda for the week, which is Hezbollah is trying to take a shot at Israel, Iran, the so-called head of the octopus, and I didn't think that Hamas was going to just step up and say, hey, you know what, it's time for us to make this deal now. I think it would look weak if Sinwar were to make it now, because it would have made them seem afraid of what the Israelis were about to do. So I know how badly everybody wants it, but it didn't seem like the week to advance the ball on it.
Yeah, well, in the meantime, the Pentagon's busy sending a guided missile submarine to the theater, the USS Georgia, 150 Tomahawks on board. The USS Abraham Lincoln aircraft carrier strike group is speeding its way there now. There's a question about whether this is deterrence or whether we're girding for something more substantive than what we saw in April.
So I totally agree it's deterrence, but there's another factor, and that is, what is the status of the Iranian nuclear program? I don't put this at a high probability, but a couple of things have happened lately, and that one, the U.S. intelligence community has backed away from its pronouncement that Iran is no longer working on the weaponization of a nuclear weapon. By that, they mean putting the fissile material together and putting it on a ballistic missile or something. So that's significant. People have noticed that. And at the same time, the Iranians are thinking to themselves, if we go into a total war situation, what's to stop the Israelis and maybe the United States? I wouldn't put it over 50%, but you've got to think about it. What if the United States says, you know what? I didn't really want Iran to go nuclear on my watch anyway, says President Biden. So maybe we'll go for it now. Don't think that's it, but you have to consider it when you think about how much progress Iran has made on fissile material and now perhaps have restarted the weaponization part of a bomb.
Well, you allude to this idea that Biden may be going for things he once was not. Can we also call that true now in the conflict in Ukraine, considering the U.S. policy for a very long time in this war was not to support offensive action against Russia? And now Ukraine has seized 1,000 kilometers of territory in the Kursk region in Russia, and you're seeing 100,000 more Russians flee there. What is your read on what's happening there? Is this something that the U.S. is really behind?
I think that the U.S. probably wasn't consulted because they didn't want to know what the answer would be. I think the Ukrainians kept it a big secret. It sounded like many of the top figures in Ukraine didn't even know what they were doing, even those that were in the officer corps that got moved into the line of fire. I do, however, believe that this is great that the Biden administration is apparently not fighting it. I think that they are
allowing it to happen.
Allowing it to happen, not hectoring the Ukrainians about what they're up to. Because to me, and we'll have to see how it works out, it's an ingenious move. It's put Putin on the defensive. It's caused, apparently, we're starting to see news reports that the Russians are moving troops out of the south of Ukraine to reinforce where the Ukrainians are running and making incursions into Kursk. So that's good news. I'm not ready to declare this a victory or that the course of the war has changed, but I'm really glad to see that the Ukrainians are mixing it up.
Well, you're seeing tens of thousands of Russians, also civilians, be evacuated from that area. Could we be talking days from now about something awful that Vladimir Putin is going to do to the troops in that region? He's clearing out civilians to do something.
I think it's very, very possible. You almost can't put anything past what Putin might be up to. I think he is absolutely trying his best to think of something new to penalize the Ukrainians with, and they better look out. Something's coming at them, but I think they're largely fearless. I think they're glad that they're on the offensive for once, that their military has come up with something ingenious and new so that they're not always sitting in a trench having positional warfare with the Russian troops coming across.
It's good to have you back with us, Michael. Thank you. Michael Allen with insights from Beacon Global Strategies. His perch now, former special assistant to the president in the Bush administration. I'm Joe Matthew alongside Kaylee Lyons in Washington, where we have a lot more to cover. We start today with geopolitics. We turn back to the campaign trail ahead with our signature panel. Rick Davis and Jeannie Shanzano are on board. Tim Walz making his big solo debut on the campaign trail today. We'll have a lot more next. This is Bloomberg TV and Radio.
9:21 on Wall Street. I'm Amy Morris. Stocks are higher after the latest U.S. inflation data reinforced any speculation that the Fed may be able to cut rates as soon as September. And we check the markets for you all day long at Bloomberg. The S&P 500 up 1.5% or 78 points. NASDAQ up 2.25% or 382 points. And the Dow is up 0.8% or 320 points. The 10-year Treasury yield at 3.85% and the 2-year yield at 3.94%. NYMEX crude oil is down 2% or $1.66, now trading at $78.40 a barrel. And COMEX gold is up 0.1% or $3.90, now trading at $25.07 per ounce. The Consumer Price Index will be issued tomorrow. Starbucks has named a new CEO and chairman. The company has appointed Chipotle CEO Brian Niccol as its next leader effective September 9th. The leadership shakeup comes after activist investors in Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Elliott Investment Management released a statement saying that it views today's leadership announcement as a transformational step forward for Starbucks. Shares of Starbucks now 21% higher. Shares of Chipotle now down 8.3%. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. I'm Kaylee Lines alongside Joe Matthew. This is Balance of Power on Bloomberg TV and radio, where, of course, we bring you all of the political coverage you need to know, and we do it as a team. And Tim Walz and Kamala Harris are a pretty new team. Now,
Yes,
we
they
just
are.
learned officially that they have become a team on the Democratic ticket as of last week. And to this point, we've seen them on the campaign trail together. That changes today, though, for Tim Walz, who will be making his first solo campaign stop in Los Angeles. And of all things, Joe, this is happening with a union. He is speaking at the biennial convention of the American Federation of State, County, and Municipal Employees. And of course, we know that the selection of Walz was welcomed by many unions, considering he is seen to be a very pro-labor governor, especially.
Yeah, unions snapped to attention as soon as Kamala Harris got to the top of the ticket, and they loved the idea. I think we can argue had quite a bit to do with the selection of Tim Walz over Josh Shapiro, remembering the concern over school vouchers and so forth for the governor of Pennsylvania. So yeah, this is ASME, and he's going to be going to a fundraiser afterwards in Newport Beach, California, which is where we start with our signature panel. Rick Davis and Jeannie Shanzano are with us, Bloomberg Politics contributors. Rick, of course, partner at Stone Court Capital, and Jeannie, political science professor at Iona University. It's great to see you both. Welcome aboard here. Jeannie, the battle for organized labor is pronounced. And I wonder how well Tim Walz has to perform on his first outing, his first solo outing on the campaign trail, or if that vote is already built in for this campaign.
He has to perform well. He also has the advantage of being a former union member himself, famously as a teacher. He also has a really strong union record as governor in Minnesota. When the Democrats took over the state legislature, he signed into law legislation that protected some of the most vulnerable workers there. So these would be like nursing home workers and others. They also get to earn paid sick leave, which is not something that is common across the country. And there will be a time in the future where they will get family and medical leave. So he's got a really solid record himself. And what he needs to do today, obviously, is he needs to get them riled up to support Kamala Harris by talking about what the Biden-Harris administration has done for workers and what she wants to do next when she is elected, hopefully from their perspective, president.
Well, as we consider the appeal to labor and unions, of course, we've seen a lot of this on the Republican side, too, as J.D. Vance especially has talked about the working man. Donald Trump, we know himself, has courted unions, too, maybe more so members than actual union leadership. But on the subject of unions, it is worth pointing out the United Auto Workers Union filed an unfair labor practice charge against former President Trump and Elon Musk after their X Spaces last night, Rick, accusing them of illegally intimidating workers after Trump was talking about how employers could fire workers for going on strike with Elon Musk. How does this play with the unions, the kind of conversation we saw between these two yesterday evening?
Yeah, I think it's mutually exclusive. I mean, the Musk interview was just a rally around the MAGA world. Musk is well known for his anti-union views. Didn't take a interview with Donald Trump to know that. And of course, Donald Trump never saw a union and he didn't want to break, even though he has some decent relationships with a few notable union executives. The bottom line is, the table is set on that as far as who's best for the unions. And this clash, I think, is just sort of electioneering, another way to show the difference. But I think the mistake Democrats tend to make is that they basically try to lump every working class individual in the United States as a union worker. And sure, you can love unions as they do, but it leaves out the vast majority of working people in America if that's all you talk about. And so great that, the vice presidential nominee Walz is doing this in California. And, these are obviously unions that he worked with directly, as governor. But like, if they don't expand that class and that conversation to non-union working class voters, then they're not talking to the right people, especially in the Sun Belt.
I want to just listen to what Donald Trump and Elon Musk were saying in that moment where he talked about this idea, and we'll continue our conversation. This is from the X Spaces convo between Elon Musk, who you will hear, as well as Donald Trump.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love it
if it were formed.
Well, you're the greatest cutter.
Okay, so Elon Musk pitching himself for a possible role somehow there, it sounded like, in a potential Trump administration 2.0. But Donald Trump went on after "you're the greatest cutter." He said, "I won't mention the name of the company, but they go on strike. And you say, that's okay, you're all gone. You're all gone. So every one of you is gone. You want to quit? They go on strike, and he gets rid of them." Jeannie, we keep talking about the fact that UAW rank and file have been voting for Trump over the Democrats in the last two elections, depending on which state you're looking at. How could that be the case with a conversation like this?
Yeah, I mean, I think when people start to focus on these kinds of statements, and that's what the Democrats are trying to do, is to say, great, you have two, million billionaires talking to each other, and this is where they come down, fire workers. That's what Democrats are going to be saying. Another thing they're going to be saying is look at what Project 2025 says about firing civil servants, the very union that Tim Walz is going to be talking to, placing them, potentially replacing them with political appointees, maybe banning public employee unions altogether, which is in keeping with some kind of commission, I guess, that Elon Musk wants to join, but not just for public employee unions, I guess, but for unions, particularly in the automobile sector. This is a disaster for Republicans if this is the message. Donald Trump was much better off when he was appealing to white blue-collar workers, both union and, to Rick's point, non-union. Talking about firing people, and particularly billionaires firing people, is not a message you want to send out right now, and I think this works to the Democrats' advantage.
I want to go back to this whole notion that it kind of felt like Elon Musk was asking Donald Trump for a job last night, Rick. I'm not sure if that was kind of the point of this whole exercise for Elon, but I wonder what the point of the exercise really was for the Trump campaign. Was this just about getting attention, or was this about trying to reset the messaging? And if so, considering he didn't even really seem to be able to recall the name of the vice presidential nominee on the Democratic ticket, Tim Walz specifically, was this a success for Donald Trump last night?
Yeah, anything that's not been an abject failure would be considered a success for Donald Trump in this last month. Most of his outings have been an epic failure. Here, he could sit at his desk, he could read notes, he could, be organized around some of the themes. His campaign has been begging him to please return to some level of normalcy with his talking points. There is an argument for, what he did for, in his administration economically, and of course that's the appeal. What the platform at X gives him is a whole lot more people than the sort of quiet little crowd that has been assembled around, his own social media outlet, Truth. I think last night was over 1 million people who tuned in. that is significantly more than he's ever going to get, on Truth Social. So that was a success to be able to expand his group, find listeners who are interested in him. My guess is the people who made up that audience were the media and his own hardcore supporters. So reassuring them that he's on a track to win, reassuring them that he's got a plan, not going off the rails on a lot of conspiracy theories. And frankly, I think Musk kept him from doing that. He sort of kept it along a chatty way. So I'd have to say they're probably all thankful that it went as well as it did. But I don't think it moves the numbers at all. I think these are people who are already supporting Donald Trump. He's not communicating with swing voters on X.
Interesting response from the Harris campaign on this, referring to the fact that these two rich guys cannot actually serve a live stream in the year 2024. Jeannie, I don't know if Elon Musk actually wants a role in another Trump White House if Donald Trump wins this election. Does this have more to do with working with the government as the leader of SpaceX, dealing with regulations, maybe getting a foot in the door for EVs in a Trump administration?
Yeah, I think all of the above. I think he would also, as an aside, like to keep energizing the X platform. Advertisements are still way down. He has been able to play with some of the reporting on the election so far. I mean, Joe Biden announced he was leaving the race on X. So I think he would like to attract more people to X as well. But, to the point about these two, you're sitting there listening, and I did after the elevator music for 45 minutes. And when Donald Trump is talking about the biggest threat is not from global warming, and we don't really have to worry about that because we're going to have more oceanfront property. I mean, this is the kind of statement he's sending out to people. You've got to be an extremely wealthy person to be thinking that global warming is not a threat because we're going to have more oceanfront property. I mean, it was mind-numbing to listen to. It was not disciplined, and he was pretty much all over the map. So I don't think this was the win his team wanted. He needs to be disciplined on Kamala Harris and what she will do to the economy, immigration, and security. That did not happen. To borrow a used phrase, it was a very weird conversation between these two for 2 hours.
All right, we'll leave it on that note. Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors, thank you both so much. As always, it was certainly a long conversation. I think we can call it that. And of course, the first portion of it, Joe, was really dominated by Trump's recounting of the assassination attempt in Pennsylvania last month, which he said in his RNC speech when he was accepting the nomination, he was only going to tell that story once.
Yeah.
But we heard it several times, it seemed, last night.
Said it wasn't very nice. And Elon Musk suggesting that he was inspired by what he saw that day.
Yeah, that's why he endorsed him, he
The
says.
statement from the Harris campaign that I referred to, Trump's entire campaign is in service of people like Elon Musk and himself, what they describe as self-obsessed rich guys who can't run a live stream in 2024.
This is Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. U.S. wholesale inflation cooled in July, another sign that price pressures are continuing to ease. The Labor Department reported its producer price index rose 0.1% from June to July and 2.2% from a year before. Now, that has traders watching for the Fed's response and whether a rate cut could come as soon as September. And as you know, we check the markets for you all day long here at Bloomberg. The S&P 500 is up 1.5% or 77 points. NASDAQ is up 2.25% or 375 points. And the Dow is up 0.8% or 324 points. The 10-year Treasury yield is at 3.85% and the 2-year yield at 3.95%. NYMEX crude oil is down 1.9% or $1.54, now trading at $78.52 a barrel. COMEX gold is up 0.1% or $2.90, now trading at $25.06. The yen is at 146.83 against the dollar, and the euro at 109.74 against the dollar. Financial markets flashing a higher probability of an oncoming recession in the wake of the market maelstrom that briefly sparked fear across Wall Street last week. It still remains an outside chance, but models from Goldman Sachs and JP Morgan Chase show that the market implied odds of an economic downturn has risen materially. And we're looking again at oil, which has slipped. It has broken now a 5-day streak of gains. Traders weighing concerns about an escalation in the Middle East conflict against the prospect of a potential crude surplus. Once again, NYMEX crude oil now at $78.48 per barrel. Starbucks has named a new CEO and chairman. The company has appointed Chipotle's CEO Brian Niccol as its next leader, effective September 9th. The leadership shakeup comes after activist investors Elliott Investment Management and Starboard Value reportedly amassed stakes in the company. Shares of Starbucks now 21% higher. Chipotle shares have fallen more than 8%, about 8.3% lower now. And that is a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much, keeping us honest on the markets with so much happening in the world of politics. This is Balance of Power live from Washington on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines in Washington. An important day, an important week when it comes to the economy. Kaylee, PPI today. We're going to look ahead to CPI in a moment with breaking news now that has to do with the conversation we were having earlier this hour. The wait for a possible ceasefire deal in Israel or a possible retaliatory strike by Iran against Israel, both up in the air right now, Kaylee, and news from Axios that the Secretary of State is changing his travel plans.
Yeah, of course, Axios had reported that Blinken was going to be heading to the Middle East this week as we await both news on Iran retaliation and also news on a ceasefire agreement. Now Axios is reporting that Blinken has postponed that trip, will not be traveling to the region tonight due to uncertainty around the situation. Axios here citing two sources. And it just speaks to the very uncertain nature of what's happening in the Middle East right now, which of course does factor into the markets. Amy was there talking about impact potentially on oil prices. And what we do know is that geopolitical conflict in the Middle East could actually have economic ramifications for that very reason if it did lead to the disruption of the way crude oil starts to move throughout the world.
Well, that's for sure. It's been pretty resilient so far, but of course with so many questions about what would happen next. Imagine if, in fact, Iran does land a punch, were the words that Michael Allen used, on Israel, we could be having a really different conversation.
Certainly, and it may lead to a different conversation than the one we're having now on the subject of inflation, ultimately. Of course, there is no predicting at this point that actually a war of that size and scale is going to erupt, just that the risk is out there should Iran not calibrate this properly or Israel not calibrate its response accordingly. But the narrative right now is that inflation is on the way down, and that was borne out once again today in the PPI data we got, softer than expected. If you look at PPI, ex food and energy month over month, flat. 0% is what we're talking about. And of course, this tees up the CPI report we're going to get tomorrow. So here to talk about all of this is Laura Rame, who is with us now. She's chief U.S. economist over at FS Investments. Welcome to Balance of Power, Laura, here on Bloomberg TV and radio. Great to have you. We obviously have been seeing now what, to me, feels like we could maybe call a trend in softer than expected inflation data. I'm not sure the Fed is going to feel quite ready to call it that yet, unless you think differently, or do we have to wait until CPI tomorrow to say that for sure?
We do need to wait for CPI tomorrow simply because the household is really the big engine, both driving the economy, and that's the biggest sector when we think of inflation and that sort of loop to wages, and then again back to inflation. So when we look at the trend, it certainly has been really positive and moving in the right direction over the last 2 months. We saw after 4 really tough months where inflation spiked January to April, then 2 months where we really got a much more benign reading. And I think everyone's looking to tomorrow's data to reinforce that trend, and I think to open the door wide for the Fed rate cut that everyone's expecting on September 18th.
Liga, how about reinforcing the idea that the Fed might have waited too long here, Laura? The Personal Consumption Expenditures Price Index, which we all obsess over, the PCE, said to be the Fed's preferred inflation measure. All the components from PPI that feed the PCE were tame. Should the Fed have cut in July when it had the chance?
I'm not terribly worried that the Fed is meaningfully behind the curve. The reality is that the economy remains healthy and on solid footing. My forecast is really for an incremental slowdown. The reality is the pace of growth has been so strong. One might argue it has been unsustainably strong. Moving from 2.5% growth to 2% is a slowdown, and I think markets were just really caught wrong-footed because expectations had been really, I would say, at volume 11 maximum optimism. So I think it's a mistake to read an incremental slowdown as weakness. And let me put it another way. If the Fed is behind the curve, they have room to cut rates more significantly. But I'm going to look beyond the ISM manufacturing data for that.
Well, just as we're having this conversation, Laura, Raphael Bostic of the Atlanta Fed is participating in a moderated Q&A. He says he's hopeful in the next several months of normalized economy. He also says a rate cut is coming, but he wants to see a little more data. Obviously, we're going to get more of that data this week. And if a rate cut comes, the expectation is it won't be until September, when we're going to be just around the corner from a presidential election, Laura, which Joe and I spend the great chunk of our time, the biggest chunk of our time covering. And we're hearing more and more about the economic policies that each of these candidates, Donald Trump and Kamala Harris, may put forward. We'll hear even more from Harris later on this week. She's expected to outline it in North Carolina. But it does seem like we're getting similar things, be it related to the child tax credit or this notion of perhaps no taxes on tipped income. From your view as an economist, we've heard a lot about what that would do to the actual U.S. balance sheet, if you will, the kind of revenue lapse that may result from that. But what would that actually do to a labor market that is maybe just now starting to feel the effects of tighter policy? What would that do to wages and the way that things literally just work in the U.S. labor market?
I think that particular policy may be more popular because it's a way of helping that lower cohort of workers without putting the burden on the employer. Because, things like the minimum wage increases, I think, have been mixed in popularity because the employers feel that burden in a more pronounced way. And I think maybe underlying this, there is another issue, which is that we're starting to see delinquency rates from, creep up in credit card loans and auto loans. That is that sort of lower cohort of income that has obviously also felt inflation most acutely. So, it's a question of paying for these tax cuts. I think, unfortunately, that's what it always comes down to. And we'll see as these policies develop. Certainly, I think it's something that hopefully will be, I would expect to be popular across the board. And I think this is an area that we're watching closely because cracks are forming in the balance sheet of that cohort of employee.
Well, as we speak now, Laura, we still don't have plans from either campaign, detailed plans on how they would work to lower prices. Both are promising to do so. We just don't know how. In the case of Vice President Harris, we've been reporting that she's going to be fleshing out her whole economic plan in Raleigh on Friday. What does she need to say to be different than so-called Bidenomics? Is there such a thing as Kamalanomics?
we're going to find that out together. But I think when it comes to the Fed and the way that they think about their policy changes, they really wait until actual policy has been enacted or announced. They're definitely not making policy changes based on campaign rhetoric. So I think it's something to keep in mind as we move into 2025, because on the one hand, you have, some policy proposals to lower costs and lower prices. And on the other hand, things like tariffs are inflationary. So we need to really, I think, keep in mind that different policy proposals impact both sides of the inflation equation. And when we look at, in particular, as the campaign rhetoric heats up, the Fed is really going to keep its eye on the ball of the data that's right in front of them and not think too far ahead about what inflation could do in coming quarters.
Well, yeah, we consistently hear the Fed is data dependent. It is not going to operate with political factors in mind, hence why we could see them cut in September, despite perhaps some Republicans suggesting that that would be perceived politically. We've also heard from both of these candidates about the independence of the Fed just within the last week. Donald Trump, at a news conference in Mar-a-Lago last Thursday, was talking about this notion that he actually thinks the president should have input into monetary policy. Kamala Harris begs to differ on that. We heard her say so this past weekend. When we actually think about that notion of Fed independence, though, what mechanisms are realistically in place to prevent that kind of political interference? Is this literally entirely up to the given Fed chair and whether or not he or she is willing to consider what the president wants in policy decisions?
I think we have now, 4.5, 5 decades of evidence that it really does work well when the Fed is truly independent. And let's face it, higher interest rates, rate hikes have never been popular with the sitting administration. We saw that under Clinton. We just didn't have, Twitter at that time, and we let sort of a more back channel pressure get applied by maybe the Treasury Secretary, Robert Rubin at the time, sort of, saying some rhetoric to that effect. But at the end of the day, it's never popular when rate hikes happen. And the reality is we do often need them as a policy response. The Fed needs to have that latitude. I think there is another layer to this as well, where we may see, and the reality is it would probably take Congress to make some of these changes to the Federal Reserve Act. But there is another layer to this, which is in emergency situations, the Fed has come through in very heavy-handed terms with some of their, financial market provisions and facilities. That may be an area where also politicians over time try to claw back some Fed independence. But I think that is very low on the list of priorities. And certainly, when we look at the way the Feds handle policy over 5 decades, it's hard to point to independence as being a problem.
Laura, in our last moment here, I asked you about Kamala Harris's plan to lower prices, or I guess plan to be unveiled. So I should ask you about Donald Trump's. He says, drill, baby, drill. If you increase production enough to unlock lower oil and gas prices, that filters through the system and does the job. Is that a plan?
Clearly, oil and gas is going to be central to both parties' economic plans in terms of, keeping prices lower. And I think, keeping gasoline prices lower, because this is a huge psychological pain point for households. When gas prices get above 5% a gallon, households really find that psychologically challenging. However, that has not been a key source of inflation. And really, I think we see spikes in gas, but they come back down again. The U.S. energy industry today is much more mature and I think much more rational about their ability and their productivity to create and supply gas. I don't think that necessarily more drilling is actually a magic bullet for other problems that may be more related to distribution, refinery, and other areas, which may at the end of the day impact inflation for households more specifically.
as we continue producing at record levels here in the U.S. Laura Rame, thanks for joining a great conversation with the chief U.S. economist, managing director on the investment research team at FS Investments. I'm Joe Matthew alongside Kaylee Lyons. We'll meet you back here 5 o'clock Eastern time. Kaylee, the late edition of Balance of Power.
Indeed, we'll be joined by Celinda Lake, a Democratic pollster. We'll also speak with Aaron David Miller as we continue to watch the situation in the Middle East. So we have much more conversation and coverage ahead for you on Balance of Power, but Bloomberg Business Week is just around the corner right here on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week. It is Tuesday, August 13th. Carol Masser along with Tim Stenevec. We've got stocks up, bonds up, yields backing off thanks to the latest inflation print, really supporting the expectations that, the Fed's going to do something, cut rates come September. We'll get more on that in just a moment.
Yeah, Michael McKee is standing by. We're going to be speaking to him in just a minute. Also, huge news this morning in the world of fast casual, in the world of that morning coffee. Starbucks ousting its CEO, getting someone well-known in the fast casual space. The question is, can he do for the Frappuccino what he did for the burrito at Chipotle, or maybe the Doritos Locos Taco at Taco Bell?
I like what you did there. By the way, shares of Starbucks are up the most ever. So we're going to get into that in just a moment. Also, the conversation last night between Elon Musk and Donald Trump, what you need to know in case you missed it, or perhaps you just couldn't stick around before it started because it kind of started late.
Also, the island of, you stayed up for the whole thing, didn't you?
I actually listened to about an hour of it, and I unfortunately fell asleep in the chair listening. So about half of it.
Read into that
I took notes,
how you
though.
will. Also, on the island of Nantucket, it's a place to unwind. Is it a place to unwind? That's the question. We're going to explain a little later in the program.
That was my gift to you. I was hoping you would do that. All right, and then we're going to get into one more thing. What's going on with college graduates, the difference between men and women graduating. That's all to come. First up, though, let's get you an update on the trading day. Here is Charlie Pellet.
Well,
Amy Morris. Forgive me. Amy in for Charlie. Amy, take it away.
I'm just filling in for Charlie. It's a big shoes to fill. Starbucks, as you mentioned, struggling with weak demand and disgruntled investors, says CEO Laxman Narasimhan is stepping down after a little more than a year in that job. The Seattle coffee giant says Brian Niccol, the chairman and CEO of Chipotle, will be Starbucks chairman and CEO as of September 9th. Starbucks shares jumped more than 13% before the market opened. It's now up 21%. Home Depot lowered its forecast of a key sales metric for the year on expectations that consumers will continue to hold back spending in coming months. Shares of Home Depot now up 1.2%. Financial markets flashing a higher probability of an oncoming recession. After last week's roller coaster on Wall Street, it's an outside chance, but models from Goldman Sachs and JP Morgan show the market implied odds of an economic downturn rose materially, judging by signals in the U.S. bond market and to a lesser extent the performance of some stocks that can be sensitive to changes in the business cycle. And Treasuries advanced after a weaker than expected U.S. producer prices report bolstered the case for the Federal Reserve to cut borrowing costs more aggressively this year. We check markets for you all day long here at Bloomberg. The S&P 500 up 1.4% or 76 points. NASDAQ up 2% or 355 points. And the Dow up 0.8% or 336 points. The 10-year Treasury yield at 3.86% now, and the 2-year yield at 3.95%. And that's a Bloomberg Business Flash.
All right, thank you so much. Amy Morris, of course, in for Charlie Pellet on this Tuesday. All right, first of a handful of watched economic reports. We got that out this morning. U.S. producer prices in the month of July rose by less than forecast, reflecting the first decline in services costs this year amid an ongoing moderation in inflationary pressures. The wholesale inflation numbers precede, as we know, Tim, the more closely watched consumer price index, which is expected to show a modest increase in data. We get that tomorrow.
Okay, of course, against a backdrop of dissipating inflationary pressures, weak July jobs figures prompted economists to pencil in a series of Fed interest rate cuts beginning next month. With more on today's report and a look ahead to tomorrow's CPI print and retail sales and weekly jobless claims on Thursday. Back with us is Bloomberg News international economics and policy correspondent Michael McKee. He's here in our studio. Equity markets certainly liking what they saw when it came to economic data released this morning, Mike. Fed friendly? Does it support easing inflation?
Well, it does. It doesn't put a lot of weight on the Fed to cut rates, but it says they can go ahead with it. And the markets, I think, reacted because it wasn't bad news. It was, more of the same, and we're still on track. And they probably have a little bit of a coiled spring in the idea of something's going to happen and we're going to freak out again, which certainly could happen tomorrow. Although the thing about CPI is economists are pretty good at forecasting it. Now, we got a surprise last month. It was a surprise down, negative 0.1% for the headline. And if we got another one like that, then the markets will all be happy again because then A, inflation's going away, and B, the Fed can cut interest rates. One of the questions that might come up if we got a little bit stronger CPI number is, and I'm kind of stunned that people are saying this already, is do we have stagflation? That comes up anytime.
Why does it stun you?
Because it would be 1 month and we're not going to have a jump of 0.5%. You know, if we go, we're forecast to see a 0.2 rise.